Hey, Sean,
Trade.
I'm muted.
Yeah, you're here. Okay, thanks, guys. All right. So welcome, everybody. And first and foremost, for those of you that were in yesterday's launch webinar, Disrupting the Order Flow Game, hopefully you guys got a lot out of that presentation. As always, we appreciate your attendance, but more importantly, today is an AMA. What does that mean? It's an Ask Me Anything. Deep dive into the training, deep dive into application, deep dive into settings, and just pretty much a deep dive in anything. Just get your flippers on. We're going to go swimming down to the deep, right? And you know, all jokes aside, we want to make sure that you get the most out of this information as an extension to yesterday's webinar. But today we're just going to focus on charts, talk about concepts, talk about application, talk about why we would want to do the things we use and how this is better, right? And so I will do my best to answer your questions. If I'm not paying attention, it's not because I'm ignoring you. I'm just focusing on the topics at hand. And once I get a chance to go look at the chat box, I will. And if my team can gracefully help in the meantime, that'd be great. We are recording this. We will send it out. And we'll go over all the questions. Gianni, I see all your questions. We'll go through them. Just be patient. We'll get through it all. And we'll make sure that everybody gets off the ground running here. Okay, so before I go into any more details, I do need to cover a disclaimer. Please take a moment to read those disclaimers and abide by them, understand them, accept them. We're all adults here, not here to guarantee you anything. I'm not Aladdin's lamp. I'd like to be. I try to be. We build the next best thing, but at the end of the day, performance is performance, and you guys need to be aware of the industry rules, regulations, and essentially just the business at large, right? So give me a why that everybody understands and accepts the disclaimer here so we can carry on as intended. Excellent. Fantastic. Okay, so let's just jump right into this and get into the charts. Right, and I have a few things I want to talk about. Right, we're gonna talk about settings, filters, best practices, etc., etc., etc. Okay, and we are starting now. So one of the things that I just want to talk about, and let's just kind of. This is kind of like my agenda. And as I'm working through this in a training environment, let's just go into some deep dives. What do you think is the two most important things in trading? What do you think? I know this is a pretty big question, but let's see if anybody nails it. Getting a whole lot of mix, and this is what makes the market a free market. Everybody's got a different brain between the ears, right? Well, let's talk about volume and order flow. The market is volume and order flow. Like that's what the market is. Like it's liquidity and then it's the flow of the market. Everything outside of that is driven by movement. So if you think about this, volume and order flow has to happen in order for the market to do something. It's a zero sum. Like you could say, well, buyers and sellers and, you know, demand is greater than supply and supply is greater than demand. That's just a fancy way of putting economics into financial trading, right? But at the end of the day, there's buyers and there's sellers, and the end result of that data is going to create, okay, price movement. Well, the whole focus of our product launch is on the order flow concept, the execution, and this isn't one before the other. Like this should just be volume. There's no number here in what this is, because order flow creates the volume profile. Like that's the reality. Order flow creates the volume profile. So let's just put an order of hierarchy in here. And volume profile equals AOIs. So banks can see where to do business. Does that make sense to you? Like banks are trading the auction. They have to. Do you really think a bank's going to execute 10,000 contracts on a 4-tick range bar? Like, come on. Like if you've ever watched the TV show Billions, if you haven't, get it, like it'll change you, right? But when they're moving money around for a hedge fund or for a pension fund or for a firefighter's fund or for whatever fund's being managed, they need to be able to make decisions and have their trading desk execute in locations, right? This is how the banks move, right? Well, as a day trader, that means absolutely nothing to us if we're trading order flow, because we're not sitting there trading levels trying to capture 50 points every day, right? Because that's a level strategy, right? As an order flow trader, you're a day trader. You're looking to get in, get out, make your money. And so when you look at the reason I want to bring these two together is I truly believe that they're the two beating hearts of the market. Like if you really get into everything else, like trend lines and indicators and momentum and EMAs, like they all have their place, but they're all based off of price analysis after the fact, which forces you to have an opinion. Like, think about this. Like, if you say, well, I think the market's doing this, or I think the market's doing this, or, you know, or that looks like an uptrend, or that looks like a downtrend, or, oh my God, like we're in wave 1 or wave 3, like all of that is subjective to you. The rest of the world doesn't know you're thinking about that. And therefore the rest of the world has no care about what your opinion is on the market, right? So when you remove that subjectivity, you can then basically put yourself in an objective state. How many of you guys understand what I'm saying? Does it make sense to you? Can you see relevance to where this conversation is going? It's not just about a product. I want to take you by the hand and show you how to become the best badass trader you can be using this type of a product, because it's not like all the other systems. It's not like other indicators. It's not like all the other concepts. It's all about understanding why things happen, where they happen, and what to expect from them. Then we'll go into the data. And then we'll go into the information and explain why it's doing what it's doing. Because once you see the power behind that, you'll stop freaking guessing about what's going on in the market. And let me go back to the slide. Take control of it. Right? Take control of it. How many of you guys are in a place where you're like, I want to start taking control of how I'm trading? Like I really want to. I want to start trying to get a handle on things so that I can really really gauge it, right? Like, exactly. So let's just clear out all the drawing tools for a second, and let's just go back to market theory. And we'll go into order flow in a second. Anything to improve, Lee, great attitude. Okay. So like I have a product, we call it the macro profiles. Do you need our product? It's not necessary. Is it better? It's amazing. It's a multi-time frame auction product. Like it's one of the best in the business, right? It's not the only one in the business, but it's one of the best, right? And I'm not saying that because I coded it. I'm saying because I know what it does, right? I'm just telling you what it's designed to do. Now I can look at the daily auctions. Okay. I can look at the daily auctions, or I can look at the weekly auctions. I like to look at the weekly auctions. Why? It's easier for me to read it. Like it's just so much easier for me to understand the weekly auctions because it's less decisions, less information coming at me like a fire hose. The market's full of information and you're just constantly trying to understand it. Like how many of you guys feel overwhelmed sometimes? Like, fuck, I can't figure out why that's doing this and what's going on. And that's just the reality of information overload. Like you get the analysis paralysis, right? So let me kind of just point out what I think is critical in understanding auction theory. You have 4 main areas that you need to know. Value area high, value area low, point of control, low volume nodes, high volume nodes. It's not some science. Like this is critical information that you need to understand. And if you don't understand this, please go into the members area and watch our volume profile. You can email us and we'll send you the ebook on volume profile. Okay. Why is this important? Because it's more important than indicators and trend lines and you drawing support and resistance, because it's not based on what you think the market's doing. It's based off what the banks are actually paying attention to. They have to. They have to. It's not about opinion. It's not about, hey, Sean thinks the market's going up or down, or, you know, Thomas thinks this, or Lee thinks that, or Miguel thinks this, or Jim says the market's doing this. No, because the market needs to understand liquidity to do things. And then there goes down to the whole cheese discussion. When you go into an actual store, right? If you go into the store and you buy cheese for $5, who set the price for cheese? The industry, supply and demand, right? And you need to know, well, should I be buying cheese at this price, or should I be waiting until it goes on sale? That's how people think in trading. Well, professionals think that. They want to buy things when they're cheap and they want to sell things when they're expensive. In terms of auction theory. Now, this has nothing to do with order flow yet, and I'll explain the paradigm. I'll explain how we bring it together. But if I'm looking at a profile, and I'm looking at an auction like this, I need to be able to make an opinion on what the market's doing, where it's doing it, why it's doing it. We've been consolidating in a massive range for 4 days. What does that mean? It means there's a lot of opportunity to trade from one side to the next, but it's also a higher time frame consolidation. That's all it is. Now, that's too macro. Nobody cares about that. Like if you say, oh, Sean, we're consolidating on a 60-minute chart. Big whoopty shit. I'm a day trader. I'm looking for 12 ticks. Don't bore me with all this garbage of higher time frame stuff. Yes, but there's relevance to it so that you understand what to expect when you're at certain areas. Now, we opened here today. So when traders come into the market and they're like, well, why are we doing these things? Why is the market going up today? Why is the market going down today? Why is the market not going anywhere today? Well, you need to understand why it's doing what it's doing. So I'm going to just map out some high volume nodes. Okay, we're gonna map out some high volume nodes right here. It's a high volume node. Okay, that was below the weekly auction. There's another high volume node. I'm going to stay in draw tool mode for a second. You're going to see why this is important. Okay, there's another high volume node here. Okay. Keep questions relevant, please. Keep questions relevant or we won't respond to them. The other side of this is, can you really make sense of this auction from a high volume to low volume node? Because this is all high volume in here, right? Like you can see that this is all high volume. It's because we're consolidating, right? We're in a big range. So realistically, the most important part is the point of control in this auction. And then the value area highs and the value area lows. Why would we pay attention to that? Because the value area highs represent cheap prices or expensive prices. Sorry, let's just do that. Expensive prices. The value area lows represent cheap prices. So when you go into the market store or the grocery store and you see cheese on sale for $1, you're going to buy cheese, right? And when you see cheese is $10, you're not going to buy it. You're going to try to be the seller selling it in the store at $10 because you're going to make a whole lot more profit selling it at 10 and buying it at $1. Does that make sense? You buy things cheap, you sell things expensive. So today coming into the market, we were cheap in terms of auction theory. We were cheap in terms of the marketplace. There's a point of control. Now I'm going to map out value highs and value lows for market profile and volume profile. Why? Because this is expensive territory up here. This is cheap territory down here. And until we actually move this auction down, anything below here is still cheap until the auction shifts. So what do you think banks do? Okay. The auction is going to do what it does. They liquidity sweep the lows. They took out all the stops. They loaded up on a liquidity sweep and they ripped it up. Right? Why? Why shouldn't they? That's what you should be expecting here. knowing where you are in relevance to the market. Because let's face it, we're getting up every morning as day traders and we're stepping into their arena. We should be paying attention to what they're doing. So if you were to ask me, what should I do here as an order flow trader? Well, first and foremost, you need to know where you are on the map. If you're on the ocean and your compass is broken, it's going to be really hard for you to determine where you want to sail, right? So mapping out these areas of interest, right? And mapping out the peaks on these value highs, okay? When you get to these areas, they're key decision points. Let me just explain something. If I'm coming down here, that's acting as support. If I'm coming up here, that's acting as resistance. If I'm coming down here, that's acting as support. If I'm coming up here, that's acting as resistance. If I get above here, that's acting as support. That's acting as resistance. If I get above here, that's acting as support. That's acting as resistance. But if I'm going from here up and I'm going through this way, where do you think the market's trying to go? It's trying to go from cheap to expensive. Banks need to buy down here. They need to sell up here. Now, as a day trader, you're not going to put on a position with a 75-point stop and ride the entire wave every day unless you're an auction trader, right? Unless you're a profile trader. But as a day trader in order flow, this gives us power to go into the data and see why the market did what it did today in the areas that it did. Now, I'm going to talk to you about the wins, the losses. We're going to show you Jim's trading charts. We're going to show you mine because it's a story. It really tells the story. Okay, so let's talk about the two focuses here. I always want to determine ultimately on my smaller time frame as well, who's in control of the dominant impulse, because trend is subjective. You're in trends on a 1 minute chart. You're in a trend on a 3 minute chart. You're on a trend on a 5 minute chart. So having a bias is unhealthy, but understanding what the impulse to correction is very important. So let's just take a look here and let's, without going into order flow, let's just go to this time frame for a second. It's the same chart. Remember, this is the point of control. We'll color it differently. So you can see that we'll just put this to yellow. So you can see that's the, I don't even know, I guess it doesn't allow it. It's hard-coded orange. All right. So the point is, coming into the market open today, the market's like this. Okay. Just looking at the markets like this. Okay. The dominant bias has been short all the way down here, but I'm cheap down here, right? I'm cheap. If you notice, this is the value area lows. So I know that the banks are starting to look at putting on big positions down here, long. Well, you still might be able to get short down here, which is fine, but just know where you are. Understand why you're down here, right? And knowing that until we break the auction down here, the big guys are looking at this as being a cheap location. Now, if you take a look at this, this is an impulse, correction, impulse, correction. The market's still primed short. So any longs off the open are going to be aggressive until they break up and show an impulse. Like, it's just kind of understanding the market in itself. And therefore, if the market breaks down, we have a higher probability on the short side, right? And then if the market wants to break up, we can talk about that. And I'm going to show you what the order flow told you in these situations, because the order flow tells that story. And if we'll go into settings and we'll go into this, but I want to paint the picture now when we go into the order flow data, because it tells the story coming in off the open. Look at the aggressive long that was taken off the algo. This is, and I'll show you the settings. We'll talk about what I've done to set this. I optimized yesterday since the webinar yesterday. I ran an optimization last night for 1 week. Why did I do 1 week? Because it's an order flow chart, man. Like, I'm not trying to prove profitability for 3 months, and anybody that wants to do that, have at it, man. Like, an order flow chart, you're going to get 100 trades in 4 days, right? Like, I would rather be current. And so taking a trade, this is market open, 631. Technically, this is market open here. You can set your algo to start at 630, but you risk getting swept off the flush. There's a lot of slippage that happens in the first minute of the market. So I don't allow my algo to execute until 1 minute's passed. That's just my setting. But I want to execute quickly off the open in any major push direction, because you're normally going to get a fairly decent trade right off the open because imbalances are coming in and they're sweeping the sweep right off the open. Now, if you take a look at what happened, remember what these blue lines are to me. That's the value area low in the market. Okay, it's the value area low in the auction, but I'm below it coming in here. And therefore, when I come back up in here, that's a very high risk trade. Even though it worked, the algo fired off the imbalances. I took my 12 tick stop, 12 tick target. I'm trading for a 1-to-1 on this template. Okay. Also, I'll talk about my volume settings. We'll talk about everything here so you can see it. But I just want to kind of walk you through how the market behaved this morning and show you how the order flow responded to the areas of interest and why you could look to do things in certain locations by turning the algo on and off. Now, I'm always going to let the algo run off the open because I want the market to do what it's doing. You don't need to do that. Okay, you don't need to do that. Now, you're going to see there was some imbalances here. There was some imbalances here, but I was already in the trade here. Had this not have executed, you would have been long here or here. Okay. Now, as soon as this pushed up, got my fill, this is resistance until we're coming above it, back down into support. We are below the auction low. It's acting as resistance until the market gets above the value area low. That's how support and resistance works. So you can see this is clearly resistance in here, right? Okay. We'll get into the confluence in a second, CL. I want to just talk about order flow imbalances in terms of areas of interest. And then we'll talk about confluence and how to use that as a filter and how to use that as a sentiment guide. And that's a great question. We'll get into that. Okay. Now, when you look at where the market will go, if the market drops from here, why would it go below here? Well, we've already mapped out that's a high volume node. The market needs to go back to volume to exit positions. If they're coming down here, they got to go there. If they break through here, they got to go there, come back here. Like it's just the way the market works in terms of support and resistance, right? So if you look at how this market unfolded in here, okay, I got short here and I got stopped out, right? I got stopped out. Why did I get stopped out here? Well, first of all, I'm still not in a downtrend. And second of all, big delta stepped in here. Okay. But I'm fine with that because I let the algo run what I'm doing. Okay. Then another long here, got stopped out. So the market went sideways for me quickly. Okay. Very, very quickly. And this environment, okay, showed me that we're in consolidation real quickly. As soon as we break out of that, there's the next short. Boom. Down on the wayside. Now, you can make a decision as a trader, okay, to only trade once you've taken out structure in the direction, right? If you see this, we hadn't taken out structure here. So taking a short here, it's aggressive, can work. You don't know that, right? We're still in resistance. There's nothing wrong with taking the short there, right? Especially since the market has the ability to break down. So I'm not upset with getting stopped out in here because the whole point of trading order flow is I got to pay to play. It's like when you play poker, you need to have the small blinds and the big blinds to see the hand, right? And then what ends up happening is that once the market took out the structure, we pushed a lower low. We came back up, got the imbalances, took the trade short, got my trade. So 1 win, 2 losses, 2 wins. So I'm break even right here. Okay. Now let me explain something. I turned the algo off. Why do you think I turned the algo off right here? I want to ask, like, I want you guys to tell me what you think my thought process is. The whole point of an AMA is to teach you how to think and how to understand how to use tools to get the most out of them. Why would I turn my algo short off here? Coming into support, Nancy says. Okay. Rick says, hey. Okay, I'm very extended from the mean, meaning like from a mean reversion perspective as a trend trader, okay, from a trend trader, as a directional trade, if I know that I'm trading directional imbalances, because I'm only trading with the direction of the EMA, I'm not going long down here. But why would I want to go short at the end of a big push, right? Yeah, it could have very well worked. I've seen the market flush and then keep flushing and then keep flushing, right? But this is support, and this just had a nice big move for a profit. What do you think the better traders are going to do? Even if you miss a trade from time to time, what is the better decision? Let the market pull back, turn the algo back on short. That's what I did. Wait for the market, pull back. As soon as that candle closed, and I'm reaching this way, I'm going to engage short. Why? Because I don't want to get short at the lows and then get sucked in. I want to get the pullback. Came in. This is a 12 period EMA, right? It's an area of interest, right? It's not, I don't need it to touch the EMA. I don't need exact things to happen. I mean, if I'm trying to be perfect, that doesn't make any sense. Like the markets are not perfect. Another thing you want to pay attention to in the story is here, I'm really, really confident about this long and this stop out because the delta started to go positive. So taking a short in here was aggressive. When you start seeing all those positive deltas coming in here, especially green, 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 we had a little bit of red, but we didn't have a whole lot of trend setting yet, right? So taking a short in here, you're going to train your eye to start seeing the data a lot better once you've seen it. We'll talk about it in the classroom next week when we run the room and we have everybody in there. But you're almost better off, right? You know, just only going long in here until you start seeing this delta start kicking in. Once you start to see the cumulative delta shift to red, right? That's when I would look to engage the shorts, right? Up until now would be longs. And if that was the case, if I was I was just letting it run this morning until I was at certain areas. But if you're paying more attention to the cumulative delta went positive here. So therefore, taking a short in here until we proved itself very aggressive. Okay. Yes, it is, Silent Warrior. Yes, it is. Now, when you take a look here, as soon as that cumulative delta shifted and we started getting heavy sells in here, right? I'm okay with the stop out here. This could have been avoided, but this is nothing wrong with this. We're on the right side of the market. We're on the right side of trend. We're consolidating. It could have very well lifted there. So that is an honest stop out, considering we had all this delta. This could have been avoided by taking aggressive shorts until the market started to prove itself down again. And then basically, when you take a look, this was a very, very high probability short coming in off a retest. Delta started climbing, right? And you could have got that information on that. It was everything started lining up red again. So when you get a pullback and the imbalances kick in, makes a whole lot more sense. Okay. Now, take a look here. We get the short right down into that volume node. Now, had I not have dropped my volume node in there, you're just based on all this chop and chop down here, all this market movement, right? The market reacted off that volume. Okay, the market reacted off that volume very heavily. Okay. Now, what do you think? Let's take a look here. I am now still trading in a downtrend. Yeah, you can turn your algos on and off, long and short or long and short only based off your settings. I have an EMA filter on. So for me, okay, I'm only going short below the EMA. Okay, so let's take a look. Let's take a look at this. I got short again here on the pullback. Came close to the stop, but the trade worked well. Okay, delta still very negative. Cumulative delta still negative. Buyers tried. That's profit taking. That's not intent. When you see the cumulative delta shift green and everything shifts green, that's when you start seeing real buying coming in. Sellers driving the market. Profit taking is going to shift the data. You have to. Buyers need to exit. limit order longs need to get fired. That's how order flow works. Now let's go through here. Now, take a look at this. I'm in support. Bunch of big imbalances in here, right? Bunch of big imbalances in here. Now, we'll talk about the confluence trade after. Okay. Let's take a look at this. Taking this trade right here on both the confluence trade, all red, or an imbalance short and an imbalance short. What do you think about that? Like, what do you think about trading here short into this area? We're going into a high volume node level of support. Remember this? Very risky. Very risky. So I turned the algo off as soon as I exited that trade. Now, I want to talk about this for a second. There's a setting inside of the software which you need to understand. When you're in a trade short and it exits in this candle, there's a setting inside the software. And like I said, we spent a lot of time building this, so we thought of pretty much everything. Anything that we haven't thought of, we'll take open feedback wherever. It says, allow entries on exit bar. I do not allow entries on my exit bar. Okay. I will not take an entry on the same candle that I'm exiting a prior position. Why? Because I want to give myself time to kind of let the market unfold. I just got out of a trade, let it breathe. Unless you're running an HFT and you're just going boom, 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 that's fine, but you need to set your template up like that. I'm just telling you that that's why I did not enter short here, and I would also not trade short going into that support. So I not only can't enter on this based off my settings, but I turn the algo off here so that, look what happened. Watch what happens. Flushed. Okay. Don't worry about this. This is a limit order fill stuff. Jeff and I are fixing some stuff right now with limit orders. Okay. And let's take a look at the rotation. Now, take a look at this. Is the very first time. Will the algo still show the entries even if disabled taking them? Great question, Thomas. In fact, we're actually adding that in V2 because Jim and I were talking about how it's still really valuable to freeze the tape and to see where the trades are, even if we're not executing them in live markets. Right now, when you turn this off, it actually stops freezing the signal logic. It stops doing the analysis. Jeff and I have made a revision to the V2, and that's coming hopefully early next week, and everybody will get that, where if we turn it off, all it's doing is disengaging the executing of the orders. It still does everything, right, that you're asking. That's a great question. It's very relevant. Yeah. So when we go in here now, I just want to talk a little bit that we're coming into support, right? Now, I just want to kind of go bar by bar of this morning because, like, it's really valuable to learn this way. It's also good to see how things work. Now, at the time of this, because we're running intra-bar entries, I think it's really important to understand bar close versus intra-bar. These are things that everybody should be learning if you're going to be understanding how software and indicators plot. Indicators, momentum, averages, everything is operating on a bar close basis. Okay. And then when you run intra-bar execution, it's going to look at intra-bar. So at the time of this trade, the next candle, this EMO was cutting through here. And so therefore it entered on my trade and entered on this imbalance. Now, at this point in time, I just want to point out something, that it's still quite aggressive to go long here. But by definition of the algo, I was above the EMO when it happened, and I have room to go to resistance. Think about that for a second. I want you to think about that for a second. Coming out of support, buyers are stepping in. Look at the conviction on the delta coming in here. Everything is lined up. Cumulative delta shifted. Delta bid-ask percentage is a high percentage, okay? And therefore, everything lined up. Delta price correlation lined up. So here's the key. I'm against structure. I have not yet closed above structure. So I'm still just trading with the direction of EMA at this point, and ultimately just being on the imbalances. Executed on this trade long, basically kept going, and there was my target. Now, where am I right now? Where am I in terms of going into an area of interest? Am I in an area where I've got a lot of room to breathe? Do I have a lot of room to resistance? Remember, this is starting to get resistance. This is why this gives me area to go to resistance. I have resistance above me. So trading long again in here, it could work. I could definitely get up here into this resistance and I could take another 10 ticks. Just remember, if you took it, okay, if you took it and I turned it off, I missed a winning trade here. I missed another 12 ticks. But that's a decision that you can choose as a trader. You don't have to run the algo like a Wild West trader, cowboys, balls to the walls. You can think objectively and say, you know, because order flow is happening, guys. It's going to happen. And, you know, to a trader that's coming into the market this morning, we're literally going from 78 down to 66. You're like, it's a 10-point move. Like the market's in a 10-point range. Like to most traders, what they're doing is they're saying, oh, the market's choppy this morning. Oh, the market's not giving me any opportunity. I hope the market does something. Oh, we're waiting on news, blah, blah, blah. Well, an order flow trader is saying, I don't need to make those excuses anymore, because even if the market's in a small range, I'm still able to extract trade opportunities out of small movement, large movement. It doesn't matter. Does that make sense? You just may have to be a little bit more aggressive in turning it off in key areas, but you still trade from area to area, as long as you understand what you're asking the software to do. Now, this was a trade right here. Remember, I would not enter on my exit bar. So even if I didn't turn it off, my next execution would have been 1, 2, 3. I would have got my order filled here, maybe missed it. Maybe missed it, because at the end of the day, I would rather, I have it set to limit. So let me just explain something here. This is a preference. I actually had better back test when I set the last week of performance to limit entry. What I've done is I set it to limit entry. You can enter on a market order. Nothing wrong with that. You might get filled where I might not, vice versa. You might face slippage where I don't. You have the ability to choose, do I want to execute this entry on order flow plus 1 tick, or exactly on the entry location? And what you can do is you can say, cancel the limit order if I don't get filled and the next bar opens. Like I don't want to get filled on the next bar. It needs to be on the same candle as I'm on, okay? And then ultimately, I also have it set that if I get an order and I have an opportunity, I will basically cancel the order if the trade moves 6 ticks away from my order and I don't get filled. Why? Because it's a 10-tick bar. If I miss it, I miss it. I don't want to have a pending order. So this is just a decision I've made to optimize how I choose to enter on my fills, right? This is something that you can do to set the software up. So in a situation like this, and I get this order flow here coming in. If I didn't take this trade here, okay, then I would have executed here. But since I was in this trade and I don't enter on my exit bar, I didn't take a trade here. And I turned it off anyways. But if you took the trade here, you would have got the fill here. The market could have gone up and down, up and down, up and down. If it pushed up and it left you 1, 2, 3, 4, 5, 6 ticks, if I didn't get the pullback, it would have canceled my limit order. Do you understand? That's the whole point of limit entry. If you enter at market, like I believe you had it, Jim, were you entering at limit or market? I'm not sure. But if you entered at market, you probably got filled on these 2 ticks if you entered there. Right?
Yeah, I think I had more than you. Yeah.
Yeah, you had more trades than me because you entered at market, you just let it run.
Yeah.
Right. And so when you look at this environment, there was another 12 ticks there that could have been abstracted. But let's talk about this for a second. Where am I now inside the market? Back inside the Valerie low. Back inside a key area on the auction, right? Remember what banks are doing down here. What do you think this is? Buying, selling, accumulation. Woof, they're going to drive it to the value area high once that order flow is done. Big orders. Think about how much orders have to be executed here and here and here and here in order for the market to lift to the value area high of the weekly auction. Like there's a lot of liquidity that needs to unfold in here. So when you think about where we're at, okay, I pulled up back to the EMA. Okay. Now, would you think you could engage the strategy here? Well, yeah, we're in an impulse leg, the market showing that we're trading long. We're in resistance, but that doesn't mean we're not going to break back up in the middle of the auction. So I turn the strategy back on. I'm in an uptrend, right? I'm in an uptrend. This is an impulse. This is a correction. If I'm going to trade long, I don't want to trade long up here at the highs so far from the EMA. Why? Because it's called mean reversion. What ends up happening is these are all the buyers getting trapped up here. It's a trap trader environment. I would rather wait for the market to pull back, show me that buyers are stepping in. Delta comes in and proves itself on the pullback. Bing, bang, boom. Come in, turn the algo back on. Right? There's the entry. Right? Clean trade. Now I'm going to turn it off here. Why? Because I'm at the highs. I don't want to force a breakout here, right? When I'm going into resistance. I want the market to start proving myself. I want it to start proving itself. Okay. Market comes in here, consolidates. Okay. Now, this is interesting. This was really interesting because based off of what was happening here, okay, based off what was happening here, there was a big shift of confluence. I made a mistake manually, which is why Jeff's coding it automated. For those of you that were in yesterday's event and you were looking at the confluence trade, what do you see here? Green, red, green, red, green. This is red, then green and red, green, green and red. It's a mixed environment, right? It's mixed. Consolidation, 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 right? It's mixed. But my mindset as a trader was, I'm still in resistance. I'm coming from below up to resistance. So if they really want to drive it back down to the lows to go short, this is where I would want to take the short and drive it down. Do everybody understand that? How many of you guys would think that that makes sense? Right? It's possible. That theory is not wrong. Is it right? It's not about being right or wrong, but it's a decision you make as a retail trader, making an assumption about what the market is likely to do, what it could do. If it fails to do that, and we see Delta failing here, which is an amazing lesson, which is why I really want to teach this here, because I was up $400 on the manual trades, and I'll explain where I took them on the other chart, but I ended up giving it back, and I'll explain why. Because I got short here manually on this Delta. Okay, I got short here manually. I'll show you the other chart in a second. But I want to explain why I did it. Now, the problem, I'm a human. I can't do this faster than a computer. And Jeff, you're on the call. I can't automate that manually. Like I looked and like, okay, I think it broke structure in my mind. I'm like, I got my hand on the trigger. I'm like, okay, in the way that the V2 is going to happen, the way that V2 is going to be released, we need to have a close below structure in order for us to take the confluence trade. Technically, it didn't close below structure. And what ended up happening is I ended up executing on this and I got stopped. But what I also said to myself was, okay, this is starting to look like absorption, because if the sellers aren't able to drive the market down in resistance, think about this. If the sellers are failing to drive the market down in resistance, what do you think that means? And this is why having a trading room teaching this stuff, okay, when we do this next week and we start looking at the data, is going to help you understand it. It's called absorption. And when sellers are not able to drive the market down, The buyers are consuming that delta. Okay, let's wait for it. The market, okay, flushes up. You see it? Now, you don't want to be trading long imbalances going into resistance. Areas are really key, guys. If you don't know where your areas are, you're going to be smacked in the face. Yeah, V2 is free, guys. Like V2 is V2 just means we didn't have enough time to add every single bell and whistle that we wanted to by Wednesday this week. And so you'll get it Monday, right? So a couple things here. Sellers failed here to drive the market. There's some support here, right? And therefore, if the market comes back down, okay, take a look at this environment here. This was the next environment where Delta peaked its head again, all across the board, and we're on the right side of structure. I took that short. I took that short. And guess what? I got slapped. Why? Because the market was done going down. Sometimes you're going to take these trades and they're going to be so amazing. And sometimes you're going to take these trades, you're going to get stopped out, and those stop outs are going to help you. Let me explain why this stop out is very good. The stop out is very good here because when you see that both times the deltas are not doing what they're supposed to be doing, that's when you internally drive the algo long. Turn it on, long only. You go back up, you trade long only. So that's what I did. I said, Delta is not going lower. This market's going higher. The Delta is showing me that it's going lower and it's not working. So therefore the sellers are being absorbed by the buyers. That's exactly what absorption looks like. It's an amazing example to understand the power of the data. Double bottom's an opinion, Miguel. Double bottom is your interpretation of that low. But to who, on what time frame, right? You can say, yeah, that's a double bottom. To me, this is an indication of order flow is telling me that despite big sellers stepping in, they do not have enough liquidity to control the market. And therefore, this is a great example of when this delta shifted from red to green. There was ultimately a long opportunity on imbalances. If there wasn't imbalances here, okay, if there wasn't imbalances here, you could have taken the bar close entry, which would have been the confluence trade on this one. I personally would not take the confluence trade going into resistance. For me, I knowing that this is the point of control, no freaking way. But I have room to move to the point of control. So this is why I think that it's really good to ask yourself, if you know you have a 12 tick target. Like for me, I have a 12 tick stop, which gives me entry. At least I can encapsulate the bar. To day trade, it's a day trading stop, right? 12 tick stop, 12 tick target. And when you're on the right side of the market and you have room to get from area to area, there should not be an issue, right? Now I will turn the algo off here. Now, mind you, this is the end of it, right? This was the end of my morning. I don't trade past 8 o'clock. Why? Because everything I've ever back tested for the last month to 2 months, over 1,000 trades in the month of May, all the money was made from 6:30 in the morning, the market opened, to 8 o'clock. Like the data told me over 1,000 trades across different bar types, different time frames, that no matter which variation of order flow setups and everything, that was where all the order flow money is made. Now, it did make money in the afternoon, but I'm not trading in the afternoon. I'm running a company. So I don't have that privilege. So why would I test something when I know that I can get on average 10 trades every morning in this 2-hour window, right? So this is why I wanted to kind of paint this picture and unfold it for you. Now let's walk bar by bar. Eastern, 6:30 my time, which is 9:30 Eastern, market open. This is MES. I did this on the MES on purpose, Perry, because maybe you want to trade for 2 exits and you don't want to risk more than $300 per trade. Trading 2-3 contracts on the S&P gets a bit expensive. So trading 10 lots on the MES, you can scale out 5 and 5, or you can scale out 3, 3 and 3. Like if you don't trade the MES, you could just go all in, all out on the ES with one contract. But here's what I found over the last week. I tested the bar type on the MES versus the ES. I got better results on the MES. I got better results myself. I ran an optimization last week and for the last week. And I did this last night. Like, it wasn't even prepared for the webinar. I was doing this to get ready for today's AMA and then ultimately next week's trading session with Jim. And I just want to let you know that the MES has got really good results. Makes sense because the MES has just as much volume as the S&P. Right? Now let's take a look at this. Remember where we are in terms of areas, right? Okay. This is the point of control. As an order flow trader, and when we get above it, what is this now acting as? Support. This is resistance, resistance, support, right? So if I'm going to be trading, where's the area of interest I need to be concerned about? This is an area of resistance up to here. So when I get into this area, this is the value high for institutions. Now, that doesn't mean you can't get 12 ticks pushing into this, right? That doesn't mean you can't get 12 ticks, but just remember where you're at in terms of the big picture, because this is why I think it's valuable to have areas mapped out. Now, do you need an auction? No, you could do support and resistance. You could do whatever you want. I like auction because it's what the banks look like. So market comes back down, right? Take a look at this. If I was trading an imbalance trade, I had it turned off. Remember, this is the end of my algo, right? If I was trading an imbalance trade, I would have got long right here. If I was trading a confluence trade, I would have got long on the bar close. Both trades would have triggered on that location. Okay. Would have got stopped out on that trade. Bad time of day. I don't trade going into the European close. That's why I shut the algo off 8 o'clock. All of my data shows me. And this is very, very important. Trust me when I'm telling you this. Stop trading the S&P at 8 o'clock Eastern or at 11 o'clock Eastern. It's like, stop. Don't try to force the last half hour, because I have data that proves it's not very good. Like, I'm giving you a mulligan and I'm giving you a golden egg. Don't try to challenge me on it. I spent 4 weeks optimizing the S&P over volume charts, range charts. I'm telling you, like, freaking bar types, like 1 minute, 3 minute, 5 minute, like, I've tested everything. And all the best trades happen up to 11 a.m. After that, you're in that last 30 minutes of the European close. That's like trading the Europe. That's like trading the S&P session going into 3:30 in the afternoon. It's a dangerous time to trade, right? Now, another trade happened. You would have got stopped out here on this, and then you would have had another trade long confluence with that one would have hit target. This one would have got you stopped out. This one would have hit target. You would have broke even, been a flush right here if you weren't listening to what I was saying. You're just trading every single trade on the confluence side of things. Okay. Does that make sense to you guys? Like, does everything I've made, like, said to you? Now I'm going to get into understanding the subgraph and the data. I'm going to get into settings, but I just wanted to walk you through today's trading. Right, Jim, maybe what we'll do here now is I'm going to let you share your screen. I just want you to pull up. Yeah, we'll talk about confluence in a moment, and we'll talk about the understanding of the sub panel, because it's really, really important. I want to talk to you a little bit about this, and I want to teach you what it's doing. I want to share with you why it's powerful and why you want to be paying attention to it and these types of things, right? It is definitely being recorded. Yes. Yeah, absolutely. So Jim, I'm going to stop sharing my screen. You're there, Jim? Yeah.
Yep.
I'm going to get you to share your screen. I just want you to, Jim ran the same template. I gave this to Jim last night. Jim ran this template. He just traded every signal. Okay. Mm-hmm. And if I'm not mistaken, you had 2 stop outs there, right? Boom, boom. So you had the open 2 stops, just like me.
Yep.
And yeah, just draw on there. We'll just walk them through.
My draw tool here. So we've got the first one popped right off the open at 9:31 actually. So we got a win here, and then we took 2 stop outs back to back, and then win. These are all real trade fills here. I put the algo on so you can see the entries and everything. I turned it off here actually. So I didn't take any more trades here. If I had, would have had these two would have washed each other out because they're 1-to-1. But here's the actual fills that you can see on the account. So we had win, stop, win, 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 win. So
Right.
yeah, it was a good day. I was 5 net winners at 1-to-1. So I mean, if you're 5 out of 7 at 1-to-1, that's a really good day. So
Now we have this template. Now let's go into settings. Thanks, Jim. So I'm going to share my screen for a second.
Okay.
Let me explain a few things. Like I was watching the Discord, and God bless everybody for just taking the templates and installing the templates that we've given everybody. But I remember saying, and mark me if I'm wrong here, guys, how many of you guys remember me? I guess you'd say, like, correct me if I'm wrong, but how many of you guys remember me saying yesterday that we've built templates, but you don't want to just take these templates and just throttle them because they're set to certain money management and they may not be what you want to trade, right? Like there's a couple people that were basically saying, well, hey, there's a high frequency template that Sean built. You're risking 12 ticks to make 2 ticks. How many of you guys seen that template, right? You may not want that template. You may not be comfortable taking 5 wins in a row and then not stopping and then having one stop wipe out those 5 wins. I know other traders that are more comfortable taking those tick, 3 trades be done. But the reason I set this template up is because it's more active. It's not so restrictive on the volume. So what do I mean by that, right? Well, let's go into the settings. And let's talk about how I set this template up. Yesterday, when I ran an optimization, I'm gonna explain. Well, let's run it. Let's show you the optimization parameters so you can understand what I did. Let's get into that. Give me a second. It's gonna let it load. So when we're loading, when I run my test for this template, and why I use this template today is because I ran an optimization for the HFT algo for last week of data from the holiday, the day after the holiday, and I'm gonna load the template. Okay, so let's talk about this. So this is really important that you understand this part of the AMA. And let me explain why. Because it's not indicators that we're testing. I'm not trying to test indicators here. I'm not trying to test anything other than the information coming through the time and sales. So you see this minimum imbalance, this minimum size of the imbalance as a percentage of the entire candle's volume. Okay, well, let me just explain that. If I have a candle and then a new candle opens here, boom. Okay. If I have a candle that's big versus a candle that's just small, it's just starting, this candle is going to have volume data. It's going to have volume information. So if I get an imbalance in the middle of a bigger candle, like let's say this candle is moving up and down, 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 and then all of a sudden, wham, I get a whole bunch of imbalances stacked in there. Like order flow just comes into the time and sales, flushes into the data. We can set the software to say, I want it to be 3% of the bar's volume. So that imbalance needs to be 3% or 5% or 10% or 20%. As I go up in those numbers, it's going to be very hard for imbalances to become true, because the larger you set the volume thresholds, the less frequent it's going to happen, right? So you're throttling the filters of volume, okay? And that's a great point, Thomas. So let me finish this. Thomas brings up a very good point, because when a bar is big and it's basically had a life to it and it's had price movement, there's volume. When a bar opens, there's no volume. Okay. So what I do, and this is why I've set it to 1, is because I want there to be at least some form of volume on the bid and the ask, some, instead of just zeros if I can avoid it. I just want to have some form of volume to some degree if I can. Okay. And that's why I set it to 1. And that way, when the bar opens, it has to trade at least 1 or 2 ticks on both sides so that at least 1% of bar volume allows for at least an order to be on both sides, right? And that's why I have it set to 1. Now I have templates that I've set to 10. Very restrictive. The scalp HFT template that we have that I gave you at the launch yesterday is set to 10. You're going to see way less executions on that template than you will on, say, this template, because I'm throttling the volume. Now I'm going to talk to you about minimum imbalance multiplier. This is a pretty open discussion on preference. Like, you can actually determine what's better on each market. And this is something that I always test. I always test my minimum imbalance multiplier. Why? Because I want to basically have a candle. And if I've got bid and ask price levels, I'll just do horizontal for now. Okay. At this price level, this price, I want to see a certain size. It needs to be larger. There has to be an imbalance, or price cannot go up or down. Like, there has to be. Now, if you set this to 4 or 5 or 10, not wrong, not wrong. You can just pick and choose how you want to run that. I would argue that if you're going to throttle the imbalance multipliers, keep this at 1 for now. Test the imbalance percentage later down the road if you want. The more important part is the imbalance multiplier, because you might find that on crude oil, it rips on 3 because it's a thin market. You might find on the S&P, and I'm going to run another test tonight just to see. You know, I ran this quickly just to have it ready for today, but I'm going to run another optimized test on this to see all the way up to 10. We might find on the S&P having it as a 10 is so much better than on the crude oil, it's a 3. On the NASDAQ, it might be a 5. Why? Because liquidity is different. And this is not indicators. This is the impact of volume and its ability to move price on each market, which is, let me repeat that. This is the impact of volume that dictates its ability to move price. It's a good, you might want to write that down, because the imbalance in supply and demand is what creates price movement. Now, what I've tested, this is another golden nugget. Save yourself the time. Save yourself the time, guys, because I've tested the hell out of this. Minimum stacked imbalances. As you know, you can have 1, 2, 3 stacked imbalances, or 4 stacked imbalances, or 10. If you have a 10-tick bar, the entire bar could be stacked imbalances. I've tested till come hell or high water, and it always comes back 3 is the best. So why optimize if you don't have to, unless you want to and you have a test computer and you want to do that, for all of you optimization maxis out there. But time is valuable to me. And if I can save you guys 4 hours on any optimization that you want to run, you don't need to change this. Keep this as a 3. Does that make sense? I'm trying to save you guys some effort and some time, and I value your time. I value my time, and I'm just giving you an entire month of data, which will help you. It saves you on iterations. It saves you on, trying to figure out what should I set this to, right? So for me, as a baseline, I will always set this to 1, and I'll always set this to 3, and I will optimize this for the market that I'm looking to trade. Make sense? Ticks per level, something very valuable here. On the S&P, I leave it to 1. Yeah, let's talk horizontal imbalances versus diagonal. If I have a candle, there's 2 ways to determine an imbalance. Horizontal is if I've got a price level here, I got a price level there, I got a price level there. I'm just comparing bid to ask. Diagonally, I'm comparing price from here to here, and here to here, here to here. Okay. Yeah, well, first of all, let me just explain something, Larry, and I'm just going to call a spade a spade. nowhere did we ever tell anybody to trade crude oil. So if you traded crude oil this morning, then, you just got to chalk it up to, you're rushing the process. As a good mentor, my job is to help people. And sometimes that means telling you what you may not want to hear. I said this yesterday, we have no data on crude yet. So I would never want anyone trading crude oil. If you think crude is the best market to trade, well, then it means you're not paying attention to what we said yesterday. If you didn't watch yesterday's webinar, well, then that's just bad luck. For me, stop trading markets you don't have information on. You don't know the liquidity yet. Have you optimized crude? Have you checked the volume thresholds? Do you know what type of liquidity and volume on crude is different than the S&P? No. So this is why I'm trying to be, you may not like me, but you'll learn to love me, because crude is a very thin market, and therefore you cannot treat it the same as a thick market. Just like someone who's thin can eat ice cream every day versus someone who's fat probably should put the fork down, right? You got to think about picking and choosing your battles. If you're going to take an order flow algorithm with the potential of what this is, right, you need to learn from people that are very experienced, because I'm here to tell you that it doesn't need to be difficult. It doesn't need to be hard. Just need to be intelligently focused on why things are the way they are. Okay. Now, don't take me for being an asshole, Larry. I'm just trying to help you and everybody else in here that wants to rush to trade the NASDAQ and rush to trade the DAX, or just be patient. When you understand what this data can do for you, I'll run a test on crude. You want to trade crude, I'll run a test on crude, but I'm going to make sure that I have the volume data dialed in before I just start trading order flow, because order flow is about the volume. Nat gas and copper. Sure, we could do a nat gas. I'm sure Gilbert's going to love it, right? Can't tell you about copper. I'm a gold guy. I like gold. I won't wear copper on my neck. No way. So the thing here, guys, is ticks per level is for markets that are very, very, very high levels of ticks. So if you're trading the NASDAQ, there's a lot of ticks coming into the NASDAQ, right? So you want to increase this maybe to a 2 or a 4, which would basically be better than the S&P. The S&P is it's a little bit more thick, but it's a tick by tick market. Okay. And MJ, I love you guys. MJ says there's copper and gold. Yes, but gold looks a lot nicer, right? So this is if you want to, if you're trading an NQ market, very, very thick, very, very, very lots of ticks coming in on the NQ. Like it takes a whole lot more to load an NQ chart than an S&P chart. So that's why you might want to set that to 2 or 3. My thoughts on this is like, before you try to rush trading the NASDAQ, dial in the S&P, because it's a very, very, very order flow driven market, right? It's very good for liquidity. It's very good for trading size, etc. Now, minimum confluence signals, we're not going to talk about this. Check for delta congruity. What this means is, like, if you turn this on to true or false, this just means you can't have a short on a bar that has positive delta. You can't have a long on a bar that has negative delta. And this allows for optimization. I just haven't spent a lot of time on it, to be honest, guys. And maybe I will. I will run a test just to see if I can optimize delta congruity, because it makes sense, but it may filter out some signals. And the key to filtering out signals is, you don't want to be filtering out winners. You want to be filtering out more losers than winners, right? If you're filtering out more trades, but they're not giving you positive output, it doesn't make sense. This was added so that you don't trade long on bars with negative delta. Okay, and we'll talk about that. That's what you're seeing here. These white boxes, that's called non-correlated markets. Basically, delta and price are uncorrelated. So when the market's in a white state, delta divergence is true, which means price and delta are not working together. Like our old friend Michael Black used to say, it's like a polar bear on the beach, right? You don't really see them that much, right? So looking at minimum confluence signal bar size threshold, this is unique right here. This right here is really more about, if I want the bar to have a certain amount of volume traded on it, then I would choose volume and I would set that. If I want there to be, say, 3 ticks traded on both sides of the market, so like it has to be traded 3 ticks, I could set this to ticks, right? This is basically just throttling the ability to not allow trades unless certain things have happened, right? When you run an order flow algorithm, you can pretty much drive the data of, listen, I don't want to take, like if you have a trade, the market traded lower here, right? This bar closed down and then this candle opened. If you set tick count to say, if you set this to say 3, if you got imbalances here, you need to have 3 ticks of movement before you would be permissively allowing a trade, right? So that's why it's kind of like,
That's a price option.
Yeah.
Tick count is like how many ticks, you know, like you're counting ticks in the bar. It could be 1,000 ticks or something.
See, Jedi needs to learn from the Jedi. That's the price option. I'm explaining the price option. Ticks is how many ticks have come in. Yeah. That was just I had it backwards. Yeah. I need another coffee. So thank you, Jeff, because that just clarifies that. I was defining the price, but he's also correcting me and basically saying that the tick is basically the amount of ticks coming in. So I just have it set to none because like I'm not trying to make this more difficult for myself, but we've put a lot of effort into thinking how things could work versus non-work, and we've seen a lot of things happen with stuff like that. Entry time, very, very important. This is the backbone to everything that we talk about. Turning it an intra-bar or bar close. Everything in the industry is operating on bar close, which is not necessarily going to give you bad results. If you enter on bar close in an imbalance like this, you would have entered on a bar close. If you entered on a bar close, you would have entered on a bar close. Would have given you a very similar output, right? However, intra-bar entries are going to enter intra-bar, and you're going to get fills that are going to be different than intra-bar, right? So know this, that if you're looking to freeze the tape, right, then you're going to want to do intra-bar, okay? Now, everything else below here is the engine. We're not going to do engine training today, guys. We have videos on it. If I believe Jeff and Jim, the engine algo training that we've done is available to all algo owners. Correct me if I'm wrong. So when you buy an algo, we have videos that you can go in and watch that will explain. What I'm more focused on is the strategy parameters here. This is the meat of today. Why? Because you need to understand what the algo is doing. And then we're going to talk about this next. So basically, when you come in and you look at this, the engine is everything down here. And that's just training that's basically going to be taking up more time, and that's not what today's AMA is about, right? So just know this, that there is videos that will ultimately train all of this: stop loss settings, target settings, time of day settings, money management. Now, one thing I do want to mention, okay, is I'm a big believer in the effectiveness of price and order flow. So if you have an oscillator, okay, let's just use the VM lean for a second because it's the backbone to momentum settings in all of our engine. If you have a histogram that's going like this, right, and like this, and like this, and like this, and these are histograms, right? You can see, like, let's just draw this here. These are the histograms, and then you have a histogram going like this, right? So if you have a histogram going like this and like this and like this, I want you to understand that if you're getting order flow on the candles and you're waiting for positive momentum to happen, there's a time from when the market stopped and traded this way before positive momentum becomes true. Does that make sense? So by using positive momentum as a filter, it's lagging because you're waiting for confirmation. And therefore, having an EMA filter is much more responsive to the direction because it's going to be more responsive to price. Does this make sense? So if I were to look at down here and I look at this long entry here that I got, the momentum's probably not shifting until here, right? The momentum's probably not shifting till here, which means you're not going to catch the beginning of your legs if you're going to be trading in real time. You can use momentum slope, Rick, yes, but we don't have that built into the engine. So that's why I'm saying you could use momentum slope, and that's something that we may look. We're actually adding momentum integrations to make that a little bit more effective so that we can change the momentum and make it leading. So just trust us, it's in our design specs to make the engine better. All of our algos are getting an increase in things that are, just a little bit better for filtration. But this is why I tested the EMA. And you can test different types of EMAs to be the step EMA, the SMA, or the exponential. I've always just used EMA. It's always been a little bit more responsive than simple. And you could use a step EMA. It's just probably going to come back with some really great results. But I always test a 10 minimum. Why would I test a 10 minimum? Because I'm using a 10 tick range bar, right? So like I just, you could go with an 8, maybe a 6, but it's going to be very, very tight. And, for me, I optimize 10 to 12. And I always get, the same results. Anywhere between 10 and 14 come back solid. So 12 is what I've used. And that's where I've always had better results, right? Now, the key here is that I don't use market structure. Could I? Probably could yield some really, really good results. What does that mean? That means that I'm only going to take trades when I'm on the same side of market structure and the EMA. All this is telling the software that I only want to trade long when I'm really moving with the market. So in situations like this today, right? The market was down, right? This went long. Wouldn't have got that trade. I would not have got that trade if I was using a market structure filter. Okay, I would not have got that trade. Why? Because the market structure closed down here, and therefore I had a negative structure. So I was in transition. So this is ultimately just letting you know why I don't use things. This is like, if you're asking like why the card does what it does, I'm just telling you the way I've set this up so that you can see it and you can understand it. Okay. So when you go down to the filters, when I look at just the EMA settings, I set it to basically just be an EMA of 12 because it came back with good results. Right. And so basically that's the whole concept of like why I'm doing this template the way I. So great question, Steve. Steve says, why am I not using a VWAP? Well, because VWAP could have been way the frick up here all day. For all I know, like depending on where it is in the day. And it's too macro. Like for this type of VWAP is too macro for order flow trading. And not that you shouldn't use it. It's just that it's very, very big compared to say using responsive trends. So if you're looking to catch the real-time environments of order flow, VWAP is going to be very macro. Yeah. So does everybody kind of understand everything that I've said so far? And just kind of looking at, like let's take a look at what's happened here over the last little bit here. Okay. Everybody here learned something this morning? Give me a yes if this is not everything, Thomas. I don't expect you to catch everything. That's why we record it. That's why we have lots of classes, right? But here's the thing, right? Like I stopped the algo here. Let's just decipher. Let's just kind of talk now a little bit about the rest of the afternoon. Okay. Look at how the market's responding to the resistance level, support level. You see it? Like this is not some fictitious line here. This is the value rate high to volume. Okay. So if I'm trading, and I want to trade the afternoon session, or if I want to just use order flow the right way in which you can objectively decide it. Let's talk imbalances first, and then we'll go into the subgraph and we'll do everything for the rest of the session on the subgraph, right? Remember what we said here about going into resistance. So trading long would have been better down here coming into support, but we wouldn't have been on the right side of the EMA. Right now I have it turned off, so it's not freezing the data. You see that? It's not freezing the data. And so what I can do now is I could change the algo to execute in the afternoon, and we would see the timestamp freezing because this is the end of bar result. So let's just kind of give that perspective. I can't see the true picture here. Do you understand that? This is why our algo does what it does. Now we're making V2. V2 will have that option. V2 will allow me to come up here and say, turn the algo off, which means do not execute trades, but I still want to freeze the tape. In order for me to see this tape frozen here, I'm just going to clone this chart for a second because I don't want to lose this setting. I'm just going to change the data series to today, just because I want to show today's date. So there's today. Okay. And I just want to basically add the algo to show you the full day today. I want to go in and show you the comparison to the different data, because it's really the whole backbone to what this software is designed to do. The software is designed to, yeah, that's what we're going to do here. We're going to basically talking about freezing the tape, right? And so let me just go in here, and I see a lot of your questions. I'll get to them in a second. Now, in order for me to freeze the data, I need to change the ending of the time session, because I want to show the whole day today, right? And everything else stays the same. Now, I'm going to have to turn this off again, because let's take a look here for a second. We're going to go in here and we're going to I just want to look at the data comparison. Did I have it turned on? Probably not. Got to enable it, guys. So I'm going to turn it off. Once I turn it on, get it on.
Using a different account?
Yeah, I can't. I don't have any open accounts, so I have to leave it here and then turn it off. Yeah. So I just want the picture of, since there it is. So let's turn it off for a second. Okay. So here's a great example. Like, let's take a look at the P&L. Let's take a look at the P&L. When does it started here, right? Like, let's take a look at the difference of the data here. Let's go in and compare the two. This is why I'm telling you, like, the morning is the sweet spot. So let's go side by side and take a look at the time in which this ended right here to here. So as you can see, if I was just trading imbalances going in here, going into the morning, going into resistance, filled, I can't see this here, the execution filled here. Let's take a look at this. Let's draw that on the box here. You can't even see that. That's what I mean, Shy, and for those of you, freezing the tape. That's the end of bar look. For freezing the tape, froze the tape. Here, when I turn the algo off, it just lets the order flow complete as it is. Now, we will have the option to see that in V2, so that even if you're not executing, you can still see where the signals were. But I just want to kind of talk a little bit about, like, understanding an algo into areas of interest. I really just, because order flow is not indicator based. So you're going to have it all over the place. If you just let it run like a wild boar, it's going to go all over the place. Look at this short for a second. Okay, let me just circle this short. Where are we going into? Like, remember we talked about, like, if I get above the point of control, that's support. That's resistance. So if I'm trading in here, I'm in a really tight wedge. It's like I don't have any movement. I don't have any room. So if I'm going to trade anything, I'm going to turn it long only here. And I'm not going to trade unless I've got enough to get my target. If I don't have enough room to get my target from here up, then I'm not going to trade here. It doesn't make any sense. Do you understand that? And this is actually here's my other thoughts. For those of you that get good at this, this is just my opinion here, and you can take it at will, that you don't even really need an EMA as a long bias filter. Because what I would be doing is I would just be completely turning long and short on and off whenever I'm at an area of support or resistance. Now, this is where I really think this could be taking your discretionary trading to a whole new level of automating entries, because what you can do is, just give you an example here, instead of us waiting for only to be on the right side of trend, okay, what I would do then, okay, in these situations is I would literally, whenever I'm in a support level, price comes up. As soon as I get to a support, long only. As soon as I get to a resistance, short only, because you're expecting order flow to step in these areas, right? So you don't necessarily need to have an EMA to filter longs and shorts. You can turn order flow on long or short, right? Because if I go back in here and I take a look at the day down at the bottom, look, if I got longs down in here, which we didn't, because this was freezing the tape down here. We didn't get any longs. But let's say I got buyers stepping in here, imbalances to the long side. This would be an environment where to go mean reversion. If I had buyers stepping in here and I had 3 stacked imbalances, I could go mean reversion because I'm coming out of support. I can do that. I have that flexibility, long only, short only. I just turn it on and off, on and off. Because right now, when I turn long and short on and off, I have it based off of the EMA. So I'm not going to take anything short above or you understand where I'm going with this? I have that EMA filter on purpose. But what I'm telling you is that as you understand the power of using this type of a software product, it's not just, hey, let it run and go all over the place. Because if I know that I'm in resistance up here, if I know that I'm coming down into resistance, okay, I could trade the shorts out of it. And then down here, the longs out of it. Do you understand what I mean? Like this is how you can do that. And that's a great example of arming long versus short based on areas of interest versus just trading in the direction of the trend. And this is something that you can decide how you want to trade it. It was designed to be a fully automated algo, which you can use for EMAs and filters, but you don't need to run it as an algo. You need to map out supply and demand, support and resistance, and then think like an intelligent trader and say, whenever I get to any of these key areas, if I get an opportunity and I'm coming down into support, I'm going to long only arm my algo. If I'm coming into an area of resistance, I'm going to long short my order flow. Why? Because I'm not able to execute on the order flow faster than a computer is. And using intra-bar gives you an advantage than bar close. So this is why I'm telling you that there's so much more to this than just a fully automated system. This can be used to enhance every discretionary trader's application, right? And these are just decisions that you can decide to make as a trader using the software. Yeah. So does everybody understand that? Yeah, but I don't have support and resistance tied into the engine yet. So when we add support and resistance, and you can't really put that in there, Shay, because not everybody's using the same levels of support and resistance, right? And this is something that is subjective to everybody using whatever they're using. So a great example is I'm just down here. Okay, great example. Look at this. Great example of the market coming down to the point of control. Now I have an EMA filter on here. So don't disregard. But if I took that EMA filter off, I would have got long here. Right? And this is a great example of if I'm waiting for the EMA filter to kick in, there's the long. But you can turn the software to take the long trades on in areas of support. So this is a great example of, let's say, you come to an area like this. Like, think about this for a second. This was the point of control earlier today. This is the resistance here at the very highs. Do you see this? Like, this is resistance. So let me just draw the box here for a second. This was resistance. Okay. And this is support down here from the point of control. So let me just draw that box down here. Like, if I look at these two areas of interest, arming the order flow algo to just do these things here and here. Take a look at the imbalances that came in on the sell side coming out of that. This is why you don't need to run it as an algo using the EMAs. You can say, I'm going to set volume to this, this, and this. And when I get to key areas of interest, turn the algo on short in resistance. Turn the algo long, and you don't need momentum. You don't need filters. There's no indicators. It's simply you're trading the time and sales at key levels of interest. Does everybody understand that? That's why this is not just an algo, which should, I know we call it an algo because it technically does everything that an algo does, but this is so much more than just an algo. This is doing for you, like there's no way in hell all of you are going to be fast enough all the time to execute at limit right here. Boom. By the time that candle closes, goes boop, 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 done. Most people are still trying to make sense of the information. What you're saying is, I know this is a key level. And as soon as I get here, short only, boom, done. Now you need to turn your EMA filters off. You need to turn your EMAs off for this, because if not, you're going to take shorts and longs all over the freaking place every time you have an imbalance coming into the tape, which is dangerous, which is why it could be an HFT. You could turn this literally into a high frequency system. Okay. So does everybody understand the concepts that I've explained with regards to EMA versus areas of interest, these types of things? I want to make sure that everybody understands that. Okay. Now I want to talk a little bit about the sub panel. Okay. The sub panel. So what we're doing, because this was in addition to our original development plans, but what we're doing is we are adding a signal for confluence. Now, what is confluence? And I think before we explain confluence, you need to understand what each of these things are. Down here, okay, is a graph. Now, this is not some new information, but what we're doing with it is, I'll explain it. State is not included in anything else you're going to see in other vendor software. Why? Because they do it in a very complicated way, right? Now, I'm not here to bash other companies. I don't believe in unethical practices. I don't think that I think there's plenty enough business for going to go around. Everybody deserves to get some, right? I value hard work and I value effort and action. And there's some great products out there. A great product is actually Connor over at Futures Analytica. Great guy, young kid coming up in the game. Him and I are going to be doing some order flow collaborations, right? And he's got a product called Polarity, which does stuff similar to this, but he doesn't have the ability to automate and backtest and freeze the tape and do all that. He also has something called delta congruity, right? Has anybody ever heard of this? If anybody's ever, I know there's a few Polarity users in here and there's a few people that are familiar with their software. He has like a statistical way of calculating like mean reversion versus trend mode versus, well, that's a very complicated way of just understanding correlation in the market. So what is correlation? When prices are going up, yeah, trend and regression. When would you want to be in a trend mode? Great question, Eric. Trend mode is when you're in a correlated state. In a correlated state, either red or green, what this means is price plus delta is going in the same direction. Price plus delta is going in the same direction. The markets are moving in a healthy state. They're correlated. Okay. When the market is white like this, this means the market is giving you price and delta divergence, which means the state of the market is not normalized. So rather than create some complicated technical term and all that, we said the hell with it. It's just delta correlation. Like it's just correlation and price. It just makes it super simple to understand. So we create a state column, which means I need price to be moving with delta in order for me to understand healthiness. Does that make sense? Does everybody understand state now? I think it's really important you understand that because it simplifies what everybody else makes very complicated, and it doesn't need to be. And that's just our experience talking. We've got a lot of experience with this. Okay. The other side of this is delta. Delta is the net relationship to the bid and the ask on the bar. When you have more buyers and sellers, you're gonna have positive delta. When you have more you have negative sellers and buyers, you're gonna have more delta. Okay, to the short side. Okay, so let's talk cumulative delta. Can you guys give me 1 second here? My dog's saying, Sean, I need out. So let's talk cumulative delta for a second. Cumulative delta is the sum of the delta over a certain amount of bars, right? Like the net sum of delta over a certain amount of bars. The problem with that is that everybody under the sun, if you go into, I think it's indicators, and you go into order flow tool set, I think it's something here, which you need to pay for, like cumulative delta, okay? Like it's set to the session, right? And when you use cumulative delta and you set it to a session, the problem is that it just, you could have the whole day one color. Like you could have the entire cumulative delta line, which is this entire line could be one color, okay? But the problem with that is that that's not relative to real-time analysis. So we changed it so that we can do it over a certain amount of look back. You could go 10 bars, 7 bars, 5 bars. I set it to 7 right now as my threshold because I went back and started looking at the impact of when the delta started to change and how it drove price. I would look at this as a consolidation and I would test, 10 candles, 7 candles, 5 candles. And I wanted to see the responsiveness. What I was doing when I looked at the settings for the delta was I said, okay, when did the move happen? And what was the delta setting at that point? So if you take a look at when cumulative delta pivoted here from positive to negative, when that cumulative delta shifted on this candle from here to here, that's the end of the consolidation. Does that make sense? That's the end of the consolidation. And therefore, right? And therefore, if you think about what we looked at from the other side, when you have all this positive delta and it's not going up, that's the sellers are absorbing that buyers. And when that shifts, what we're doing is we're looking at when all of this lines up. Now, let me just kind of explain what we're looking for. The bid-ask percentage, okay? The bid-ask percentage is a percentage of the volume. And then basically the delta percentage is what's important to me. What I want is the delta percentage, okay? And what I'm finding, okay? Anything over 9%, like whenever I set it to 10%, I was missing signals because I was getting like 9.7%. 6 is too low for me. I don't see there's enough power behind it. Even 8% is too low for me. But when I start seeing 9%, 10% was too restrictive because I was missing signals. I was looking back and looking at signals. So I'm just trying to give you some really golden gooses here. Like I'm giving you some nuggets. Like I spent months building this software and I've tested the settings and I'm telling you that like as soon as 9% is reached and this will start highlighting red, we can set that. So you can go in the software and you can actually set the settings to control the delta percentage. Everything else is hard coded because it doesn't matter. But when that delta percentage creeps up, and we look here at cumulative delta look back, You could set the 5. You could set cumulative delta to 5. I have it set to 7. But I wouldn't go any less than 9. You might play with it. But for me, what I'm telling you right now, at least on the 10-tick range bars for the S&P, 9's a sweet spot, right? And so when I see this, the reason I've set it to 9 is so that when the candle closes and my state, my delta, my cumulative delta, my bid-ask percentage, and my delta percentage is all flush, that's a confluent signal. And for me personally, I need to be on the right side of the EMA, so shorts, and I need to be negative structure. I need to have had price come down, which it has. Structure's down. Makes sense? So when this happens, okay, you get short on the bar close. That's your confluence trade. Now, I took that short. I took that short today. I traded it manually because Mr. Jeff and my dev team are coding the auto entry for this. And let me see, did I take that one short or which one did I take short? I'm trying to see which one was it. Let me draw the line here. I took this one, and that was the mistake on my side. And at that point, that was a human error. And I said to Jeff, actually, no, it wasn't. It was this one. I made the human error. I entered on this candle, and this was me jumping the gun. I didn't catch the delta, and as a result, I almost got stopped out. I'm here to show you this is why we're automating it, because there's no way where you're going to be physically, humanly, mentally capable of getting your eye to tune into that with your hand on the trigger. It's just, that's why it's called the HFT ALGO. So that way, when all things line up, because they didn't line up, and I jumped the gun on that, and I got fortunate because I ended up getting a mulligan, which I'll take every single day of the week. But you'll notice how I didn't take the other trade, which was the better trade. The better trade was here. The better trade was this one to this one, which was the first true. Bar close here. 12 tick stop, 12 tick target right there. That was the better trade. And it's always the first signal, after a non-confluent state. So a non-confluent state can be anything that is not all red or all green. If there's any bit of a mix of anything, it's a non-confluent state. This is a non-confluent state, non-confluent state, non-confluent state. There's something out of mix here. This is a confluent state. This is a confluent state. Non-confluent, 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 confluent state, non-confluent. Does everybody understand that? So the automation is critical, Bradley. Absolutely, my friend. And here's the reality. The reason we want to automate this is because if you don't get in, you will miss it. This is order flow trading. You only get the opportunity. And so I want to have that shit automated now, man. I want to be in on those signals because they are badass. And when you're on the right side of the market, they are the trend setters. Let me repeat this. They are the trend setters. They are what this candle is what moves the market. And when you pay attention to what's happening, when you see this happen, very, very important. When you see a bar like this that goes up, and then you see another candle that doesn't happen. So this is very, very, very important. This is the best lesson I can teach you on absorption that I've ever seen. Not that I'm better than anyone else, but it's the simplest thing to understand. Watch this. Just watch it, watch it, watch it like a hawk. When you have a confluent bar of everything that is aligned and the next bar flips and rotates, that is an indication of absorption. It is the best way to articulate, the simplest way to tell you that buyers are not happy. And when you see this, when I see that, or when I see, like, that's the first state of confluence. It's almost here too. Like if you take a look at this, yeah, it's not even failing to break the highs. It's when you understand that this data, by definition, is very, very, very bullish. But as soon as the market shows you that bullish state is no longer valid, this is the resistance of the market. This is the true absorption. And if you take a look here at the trend setting in the pre-market, look at when we went from non-correlated, correlated, immediately correlated, could not get above, non-correlated flip. There's the trend, there's the indication of absorption. Okay, so let's just take a look at this. If I just draw this candle, this candle to this candle, that's the resistance. Why? Because that's where the buyers basically showed us that they don't have the power to overpower the sellers here. We went from confluence to a rejection. If the market was going to be positively strong, it would have lifted, and therefore we would have seen that flow. In this situation, this is when you take a look at that rejection. So this is what we call absorption. Very powerful. You're going to see me talk about this in the class next week. What I'm looking for then is the first sign of negative confluence. So here's the key. As soon as you see an absorption signal, this is what I want. I'm going to teach you guys. This is your homework. Go back and watch the software. Every time you have absorption that or confluence that fails, I want you to mark it as absorption. Jeff, write this down. We're going to highlight the 2-bar pattern. We're going to code it because it's easy to code. When you have a confluence signal that fails on the next bar flip, that's an absorption signal. It's a real easy signal for us to identify. It's a 2-bar absorption candle. And then basically we'll code the bar. We'll highlight these bars. It'll be an absorption. It'll be V3, V2.1, right? But here's the critical aspect of it. What should you be looking for? Non-confluence, 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 non-confluence. Buyers failed. As soon as the sellers step in, guess what that is telling you? All of the buy orders have been consumed in the absorption. There's the building of the position. That's the trend setter. That's the money shot. And I'm telling you guys, I've been studying this shit for a month straight. And this is why we're coding the signal. And it needs to come. Like, I'm literally going to have my hand on the key here. And I'm just going to watch for when absorption fails. Because as soon as absorption fails, guess what? Take a look at when absorption fails. Because take a look, there was the confluence, there was the confluence, there was non-confluence, there was the confluence, but it failed. As soon as that fails, that is ultimately kind of your indication that this is the support level. This is the support level here. This is the resistance level here. And this is critical information for you to understand it and understand why that's powerful. Because had we have got a confluence long in here, or any type of buy imbalances coming out of this, take a look at what happened. We got the absorption. Okay, this is really critical stuff here. As soon as we get the absorption, you engage long only. Bingo. As we didn't have a confluence long signal in here, so you couldn't have got long on that. Here, as soon as you get the absorption candle, and it failed, there's the failure. We get the confluence signal, but look what happened on that candle. You also had the imbalances. And that is what I'm telling you is when you see these absorptions reject, it's game on. So let's continue. Let's watch bar by bar. There was a confluence signal. Take a look at this. Great example of the buyers coming in. Okay. This was coming out of resistance. Like I said, I will take that trade any day of the week. The only thing is I wasn't on structure, so it got swinged. And this right here, is a great example of confluence long. So you can see the confluence long, boom, it lifted. Then you see this, confluence long again, confluence, confluence. When you see confluence fail right here, if you don't see a lift from here, that's absorption. So as soon as you have that absorption, guess what you're looking for? Arming short in resistance. That's when the power move happens. That's when you get the move down. Boom. Should have taken the long here. And this is a great example of me not just running an algo long. Like, you can run it automated and take everything under the sun. But if you really want to be a master order flow trader using order flow automation, what we're going to do, Jeff, and I think, Jeff, maybe you can come on the mic and speak to the simplicity of this. Like, I think it's quite easy for us to code the transition of failing absorption. Like, there's a great example of absorption to the buy side. That's sell absorption failing. And this is basically buy absorption failing.
So you're saying somehow highlight that so we know.
Yeah,
that's
we'll
a condition.
highlight it. Yeah, you and I can highlight this, and I think it'll be really good for everybody because it'll just means they don't need to think. And we can just basically remove that level of thinking from their need to do things. And what'll end up happening is that we can visually point like failed shorts, failed buyers. We'll code it, highlight it, because what we want to look at is when sellers fail, you want to engage long. Boom. When buyers fail, you want to engage short. That's just critical. And you can tell here that this is when you get the confluence, and that's when the move happens, right?
Well, first step is highlighting it. Once we have that, that almost becomes like a directional filter.
It is a directional filter. It's the most real time that you can get. Yeah, remove subjectivity. You can guys see the amount of power behind what we're doing here, guys. This is not just some algo that we're just selling and it's, hey, go tweak these settings. This is what's moving the market. This will be the most powerful product that we ever have built, period. Like, I can take anything that any great trader is trading right now and automate their entries with better detail and better accuracy. Because if you're a low volume node trader and you put a sell limit in here, guess what happens when it doesn't work? It flushes you through. But if you're a low volume node trader and you have the ability to see that this is resistance, what you do is you wait for this. As soon as you see that the failed market isn't going that way, guess what? That's the time to get into the trade because you have the confirmation. It's just so powerful. And it removes the need to try to understand. Watch what happens. Market's coming down, boom, 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 boom. As soon as we see a confluent signal fail, take a look at this. This is confluence, but this worked. This is confluence, it worked. This is confluence, it worked. Confluence, it worked. As soon as we see a confluent signal fail, okay, let's wait for it. There's a short. There's a confluence trade right here. It gave the trade. There's a confluence trade that worked. But take a look at this. Don't worry about the yellow. That was a limit order, missed limit order engagement. But let's talk about this for a second. As soon as you see that first failure right here, as soon as you see that fail and you get a rotational flip, that's absorption. And as soon as you have that, you can engage long. There's the buyers coming in on the next bar. You don't even need an EMA filter for that. You could take the EMA filter off and just get long on that next candle. And there's the buyers coming in. Because here's the thing about this. This is where I get to teach you a little bit about the power of non-human relationships to trading. It's not the trader's interpretation of the market that made this lift. Let me just explain this. This wasn't a whole bunch of traders sitting around saying, oh, we're going to lift the market here. No, the whole reason the market lifted here was because the data that is coming in from the sellers is telling us that the sell side order flow is done. So when the sell side order flow is done, what that happens, it creates an imbalance in demand, which is what you're seeing here, which is why you get the confluence to the next side of it, which gives you the imbalances as well as the confluence signal, which is why that was a very high probability long. That's why this was a very high probability short coming out of here, because this is right after rejection absorption. Rejection absorption. These are really critical trades, guys. And I'm telling you that the more and more you just watch this, just go back and manually take a look at every single trade, every single opportunity. Take a look. Let's watch this. Let's just take this out. Let's just take a look at just. Okay, let's just remove all draw tools. Give me a second here. That's not a draw tool. Let's just watch the market as it goes up. Take a look here. Market goes up. Watch the confluence. Confluence here when market went up. Confluence here went up. Confluence here went up. Confluence here went up. We're now a mixed market, so that candle doesn't matter. Confluence here did not go up. Look at this candle right here. This candle confluence did not go up. This is the easiest way for me to teach you order. This is the best way for me to teach you order flow in the simplest way that simplifies difficult stuff, right? Because order flow can be difficult to the most part. And for the MJs of the world, I'm going to slow this down for you. When you have a confluence signal that rejects, that is the end of that order flow side, which means buyers are greater than sellers until they're not. And when the market goes up and you see that pattern, this is a rejection pattern of order flow, you can truly arm short the algo. This is just ways for me to teach you how to look at the data without having to use indicators, without having to use all the extra. I'm just trying to teach you so many different powerful ways to take this and turn this into the most badass thing you've ever seen. And what ended up happening? As soon as that candle flipped, you may have missed the imbalances here, but you definitely wouldn't have missed the imbalances on that candle. Now, this isn't even turned on, so I would argue that there's some sell imbalances in here that would have been really, really powerful. Intra-bar. This is not intra-bar. It's not turned on, right? I have it turned off. But I just want to show you the power of that. And let's take a look here at where the next confluent short was, right here. Mixed, 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 confluence. Interesting. 1-to-1 R multiple on that was achieved. Boom. There's your confluence trade right there. Then you never take the second. You only ever trade the first confluence trade. Let me just repeat that. Write that down. Golden nugget number 5 or whatever, how many I gave you today. You only ever take the first confluence trade short. You don't take this one. You don't chase the market. You miss the first one, wait for the next one. There'll be another one. Don't take the second one or the third one or the fourth one. You're missing the move.
We're coding it that way.
Yeah, we're coding it that way. But until they get that, I just want to help everybody here as best I can. Now let's watch this. There is another example of confluence flipping. Okay. In this situation, you could arm long and trade long. There wasn't any imbalances in here. We don't see them in here. Okay. We don't see them in here. But this is a great example of it absorbing, flipping. That's a rotation. Okay. Then we're going to go here. We're going to go here. Watch this. Take a look at this. Ripping. Okay. Flipping. Okay. Watch this. You see how this comes in here? Now, let me just explain something to you. Where are we coming? Out of what? Let's talk area of interest for a second. Really, really important. I want to explain a few things because this is why. Let's do this. This is the value area low. This is the value area high. So wouldn't it make sense when we're coming from expensive territory to be thinking, I want to trade short going back to the point of control or the mean or the value area low? when I'm at expensive territory, what I want to do is I want to pay attention to when this candle, watch, confluence, confluence, mixed, 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 confluence. If this candle flips down and rotates short, and you're at a level of resistance, that's a good indication to start arming sells. Think like the professional, the order flow data that's coming in. When you think about confluence, this was the point of control coming out of this. This is the point of control here in this environment right here. So when I'm coming out of the point of control and I see rejection on that support level, or if I'm coming out of the Valerie high, or I'm coming out of the Valerie high, what am I paying attention to? Because if you take away the EMA and you just want to automate order flow, which I highly suggest, because it's very, very powerful, I'm going to let the sellers tell me what to do. I'm going to watch down here. Take a look at this. I'm going to watch the sellers fail. That's the absorption level. That's the critical level of support at the point of control. That's your level of support. As soon as that happens, you arm along the algo. If I go and I take a look at what happened there, I don't know if I have enough data. Yeah, it was. Take a look at this. Take a look at this. This was the tape freezing in real time. We came out of that area and there was an imbalance trade here that executed. It just came back, low ticked us. That's okay. You might want to have a slightly larger stop. It's fine. You can choose that. But take a look at this. Longs coming out of that area, coming out of the failed absorption, arming long from support back up to the highs. This is a great example of just understanding what the data is telling you. Now that I get up here, okay, here's the key. We haven't seen failed buyers yet. We haven't seen buyers fail. So when you look at what's happening in real time, this is real time right now, okay? This is real time. And so if you look at it, I think it's real time. Is the market not moving? Do I have a data lag? No, it's moving. It's just so slow. There, I just seen an uptick there. When you see this candle drop and you see this fail, that's a confluence signal. By definition, confluence traders would want to trade long. You don't want to trade confluence long into resistance. Just doesn't make any sense. So what I'd be doing is when I get to a resistance level, what I want to do is I want to wait for a failed confluence. I want to wait for it to fail. When it fails, arm, short, bang. Take the shorts. Let the data tell you when to get in and let the data execute using the algo. Because that's what this did. That's exactly what this data tells us down here. Come down into the point of control, bang, 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 wait for the absorption to fail. And guess what ended up happening? Okay. As soon as that last trade worked on the confluence short, the confluence failed, arm long, low tick, win, 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 all the way up. And then bing, bang, boom. You see where I'm going with that? Now I'm going to do this with you. I'm going to do this with you next week. So everybody that is coming into the trading on a guest pass as a private invite to everyone using the software is going to be able to benefit from this type of education and analysis. Okay. And then what I'm going to do is I'm going to have Jim take the wheels with this, and he's going to take everything that I do next week, and we're going to basically be running the trading room to, because you have so much more opportunities this way. Like you're not, this is just such a better way of breaking down execution analysis, right? Now there's a lot of trades all day. If you trade it all day long, you can see the detriment that you bring to the table. If all you do is just you trade up and then you give it all back in the afternoon. Like you could have taken a whole lot more profit here, not running everything under the sun, right? But I'm a firm believer of being, stop while you're ahead, man. Like trade in the morning when the movement's there. If you have to trade in the afternoon, be selective with it. Okay. So did you learn something about the state? Did that help you guys understand the data table? The data table can be very powerful if you understand what it's doing. Okay. And I promise you this, it'll be so much easier when we can automate the signals and just engage. We can engage them. Now, for those of you that were in the webinar yesterday, I said we're going to do an AMA. Was the AMA valuable? Do you like when I do these AMAs on the software and like this so that you can understand the best? Like, I hope that I was able to give you some golden nuggets. I was able to give you guys some key takeaways so that you don't waste a bunch of time testing shit that's not necessary. I'm trying to show you how we're not reliant on indicators here. This is simply being strategic with information and understanding how to read that information like a Jedi. Okay. Because now you're not sitting there guessing as to why things are doing what they're doing, right? You don't have to sit there and question things, right? But we're just getting started. Like what Jim and I are going to be doing in the trading room is really spending a lot of time helping you understand how to take this information and arm this auto execution tool so that we can take advantage of data that is consistently presenting opportunities. Because the market can't go up without an imbalance in the data. The market can't go down without an imbalance in the data. When do we want to engage that data? When you have key levels mapped out on your chart and you let the information tell you what you should be doing. And any upgrades we make to the software come with it. You don't need to pay for V2 and V3 and V50 for all I care. Heck, we could be adding stuff to this for the next 10 years. But the goal here is to make sure that you have it and it works the way it's intended. Okay. So I'm going to run a poll here, guys, because I'm going to explain. I'm a straight shooter, not here to waste anybody's time because I've got to prepare templates and Jim and I have to prepare the layouts for the trading room. And many of you guys are going to have to make a decision as to whether you want to buy the software. Everybody is invited next week to join the trading room on a guest pass, okay, so that you can ultimately come and learn how to use this. That's even if you don't own the NeuroStreet package for our trading room. And after that, if you want to join our trading room using it and join us, we'll be running the HFT algo in our trading room full time. You're going to need to purchase the HFT algo. But the only way to get the package is if you come into the NeuroStreet programs full time. And we're going to open it up for free for everyone who buys the algo for next week only. And then everybody can come in and do that. So here's what I'm going to do. I'm going to launch a poll. Okay. I need to know if you're in it to win it. Are you buying the software and coming into the trading room next week? We're going to give you the trading room for free next week as a guest pass. And I need to know if you're coming in because I'm telling you right now, we're going to be spending 4 heavy hit days on this in different conditions. And you're going to be able to take this and run with it once you're done with it. Now, if you want to stay full time on the trading room after, you can. It's just you're going to have to talk to our team and decide if you want to join NeuroStreet full time. But you don't need to join NeuroStreet full time to have access to the algo. I'm just giving you free education coming into the trading. Okay. And the reason I'm asking you to tell me this is so that we can prepare our team and our support and everybody for this type of preparation. No, this software is not possible in platforms like TradingView because you can't code this type of stuff in those types of platforms. It's not available. That type of data management and data graphics is not available. Yeah. No, we're not integrating into products like Bloodhound and other third-party vendors. We don't want to. It's not our mandate. We don't use their software. It's not part of the way we build systems. We have an engine for a reason. If you don't like that, don't use the software. Yeah. Yeah, we're firm on that, right? We have algos for a reason. We use engines for a reason. We've spent hundreds of thousands of dollars building what we've built. If you like what we use it. If you don't use it. Yeah. So yeah, it's no problem. Yeah, if you don't want it, don't use it. Yeah. No, it's not possible. Yeah, we don't expose our code for everybody to have our source code. This is millions of dollars of IP. Yeah. No offense, but if you want to do that, start your own company. Build it, hire a team, put in the sweat equity. It's taken us millions. Yeah. So the key here is that if you're not able to make next week, just send an email in. If you're not able to make next week, then ultimately what we'll do is just send an email in, and what we'll do is we'll have Ashley extend that for you. Okay. This template, yeah, we'll save this template. I'm going to just tweak it a little bit with Jim, and we'll make sure that everybody has it for the trade room. I'm going to run one more optimization and just test the volume thresholds. I just want to test 3 versus I just want to test these imbalances. Yeah, I just want to test that. Yeah, because the goal here is for us to just see if if we need to increase this bigger, but I'll have that prepared for next week. Yeah. Okay. So guys, hope you enjoyed the day. There's a download section. One second here, guys. I don't know where the download page is. 1 second here. Here it is. Another thing you'll also want to know here is that we've just decided to give everybody our bar types. So made an executive decision that bar types are bar types. And if you want to use different bar types, you can go to the website, ARC. Like everybody else sells a Renko. Everybody else sells a range bar. Everybody else sells this stuff, right? We don't. So everybody in here, if you just want, this is our way of saying, hey, bar types. Go here. They're free now, right? So if you want to use the full range bars and you want to use all that, just go download them. They're for free. Yeah, we don't charge for it. There's no point, right? Like it's a freaking bar type, right? So we charge for what costs us lots of money to code. If it costs me a lot of money to code it, and I'm going to charge for it accordingly, right? So when you download the software, there's user documentation, conversion documents, strategy templates. I'll update these eventually here this week with Jim and have everything ready for going into the trading room next week. Algo video course, best practices, all these things. And, this is all here for you guys. But I just want to kind of end with this, thank you guys for, your business. We understand that we build a lot of products, and, some people like some products more than others, and some people have more success with one product more than others. And, what one person struggles with, somebody else makes a lot of money, and vice versa. We can't pick and choose our battles on that. But I can tell you this, that this is probably one of the best things I've ever seen built in the industry, not just from our perspective, but from what's available in the industry for order flow, because we can simplify the data and yet do things that no other product can. And so anybody that tries to spin off on this and copy us, good luck. Good luck, man. It took a long time to get to this. And the goal here is to help you get to be the best trader possible. So I hope you guys enjoy the webinar and the AMA, guys, and you take advantage. Jim, if we can post the links in here, and we'll just, open it up. And so many questions, guys, and hopefully my team was able to help answer that, and hopefully I did. So here's a great example of the absorption right here. It's going up, and it's not going up. And it rotates back. Failed. So guess what? You could execute, you could run this. Look at right on that flip bar, right? If this candle came in with a bunch of sell imbalances coming in here, I don't have it freezing, but if this candle came in, now it's the wrong time of day for me, but there's a lot of negative delta in here, or a lot of positive delta, but we're in resistance. So as soon as that positive delta shows us that it's no longer going anywhere, right? Then that's when you engage shorts, right? That's when you engage the details. Yeah. See, there it is. So as soon as right there, if you see those imbalances, if that was happening right now and we had it turned on, it would freeze the tape and you would have already been short. If this is how you turned it on, you see the imbalances are gone here. Now, why would I want to do that? Because it just showed me that it made higher highs in price, but it failed to go up on the delta confirmation. It failed, went to a negative state. There was an imbalance here a couple minutes ago, and right there it is. So there was an entry opportunity here that I was just showing. The entry was right here. $12 ticks. There's 8 ticks. There's 6 ticks of profit. 0.5 has already been achieved. And we'll see if, wait for this flow. If this negative delta kicks in, this is the trend setter. You just took this trade, Peter. Target hit. I know somebody in here would do it, right? 0.5 was already been achieved, right? And I was just trying to walk you bar by bar. Now we're at the value area high. That's why I'm explaining this information is valuable. It may not give you the follow through right away. What might end up happening is it might take a bit of back and forth before the real big move happens. We don't know that. We haven't broke structure yet, right? So this is still an indication for the sellers to kind of prove themselves. And a lot of times what will end up happening is they'll come back up again. You'll see buy confluence happen. And when that buy confluence happens, we don't get long. We wait for it to fail again. And when it fails again, we see the shorts and we load up on the shorts because that's where the next, right, happens. Does that make sense? Now I would wait for structure to be taken out, right, for me to expect any major follow through, right? It's an understanding of that, right? But it's a great example of just knowing that, you can scalp for 0.5 R multiples quickly, and you can go for a full 1-to-1 if you want to. I'm just thinking that this is the first time that absorption failed, and the absorption didn't fail on a lot of delta. So what I would do is I'd be a little bit more aggressive on profit taking in this situation. Why? Because I don't have any negative delta in that rejection. Still positive delta. Do you see that? So you see that, yes, it failed because we didn't go up from this area and we rotated. So that's an indication of absorption. But even on the absorption, I don't have any deltas coming in to help that short. 5 ticks for my prop. Yeah, there's nothing wrong with taking a 0.5, right? It's nothing wrong with taking 5 ticks. 5 ticks is 5 ticks. But as a day trader, like if you're looking for the extra follow through, sometimes what will happen is you'll get that second push up. You'll see buy confluence come in here. And when that buy confluence fails, that's the key. That's what you see. When you see that buy confluence fail, that's the indication that you say, guys, get ready, because this is where the pump is priming. And we'll wait for it. We'll wait for that, because as soon as that second push for that buy confluence fails, that's when you start getting short on the next push down. Does that make sense? This is how you, and you would never just do this randomly at any simple point in time. You need to know that you're at an area of major resistance, which you are, right? This is why I'm explaining to identify how to do this. Now, I'm not going to sit here and waste all you guys' time. You guys have a lot to do today, but this is a great example. We'll be doing this in real time. And this is the afternoon, right? This is the afternoon. So I wouldn't expect a lot of conviction on anything, but this is a great example of the absorption happening. And wait for the next push. If this buy confluence comes back up, not going to get long here. Not going to get long. I'm in resistance. But what I'm waiting for is that confluence to fail. I'm waiting for that confluence to fail. Right? Because when that confluence fails, that tells me absorption. And when that absorption happens, and then I get the big daddy short confluence on the other side, that's an indication that the buyers are no longer greater than the sellers. And that's what causes the reversal to happen. That's what causes the transition. When you don't have to guess. Jesus Christ, what is that? Oh, don't know what that is, Jeff. Take a picture. Take a picture.
Okay.
Mayday, mayday. See, watch what happens here. Watch these buyers. If these buyers, okay, if these buyers, let me just reset this.
There are issues with the data service today. I don't know if that might be it.
Probably. Now, remember what I said. I'm going to wait. We would wait. We would wait for the buyers to fail on the push up, which signals that the absorption of order flow is happening, which is what you want. So this is an example of the buyers. See the confluence coming in here? All things lining up. What we'll do is if this confluence, okay, if this confluence doesn't push at the close of this bar, right, when this candle still doesn't close, depending on how this candle closes, the next candle is the key. It's not this confluence candle that's more important. I'm not looking to go long in resistance. However, what we're doing is we're waiting for that data to tell me the buyers are done. The buyers are exhausted, which allows the order flow to tell us that story. How many of you guys learned something from this? This is really valuable once you understand what to see. This takes order flow, which is normally complicated to most, and we simplify it. Without an area of interest, you're just a duck in the water, right? Because you're going to see absorption and all that happen all over the place. You want it to happen at key areas. Good. So I've done my job as a mentor. Hopefully you guys can see the value in that. Not interested in going long in this environment up here. This would be an area where I'd look to plan shorts. And let's see how they rotate it, right? If the candle drops down, you can see cumulative delta hasn't shifted yet. Cumulative delta is still positive, which tells me there's still a lot of buyers in the market in this environment. As soon as I see that cumulative delta drop, watch that cumulative delta. Take a look at this cumulative delta, 2,000. 1,200, 400. Watch this. 2,000, 2,000, 2,000, 1,400. Delta is still staying consistent. I want to see that delta drop. As soon as that cumulative delta drops, everything starts shifting. That's when I engage the shorts. Why? Because I'm at resistance, which tells me it takes time. I want you to think like this, like a trader. Like think. Understanding the auction is what's really going to help you understand this. Like, I want you to think for a second. Think like a professional business owner. If I've got value high, and value lows, okay, and I've got a point of control, and I'm expensive up here, okay, then if I'm going long from the point of control up, all the longs need to exit their position. That's a lot of size that needs to offload. They're going to keep the market there until, guess what? There's no more liquidity to fill the opposing side of the market. So as soon as that liquidity is unfolded, which is why you get these consolidations, because that's a consolidation, markup, consolidation. It's either going to go this way and we're going to see confluence work, which we wouldn't touch because we're in resistance. But based off what makes sense in rotations and location, we should be expecting this. And that's how you let the data tell the story. And we have that story telling us this right here. As soon as that failed to go higher and we flipped, that's when we know that they're offloading their size. And when that, it takes time, guys. Like, think about this. How long does it take to execute thousands and thousands of contracts? It takes time. And now you can see the deltas starting to come in a little bit, right? You see the sellers coming in a little bit. Now you can see it. And as I said, you can arm short the imbalances. You could have already been short, taken a 0.5, moved to break even and been out. But this is where you wait. And you can see it. I'm going bar by bar in real time. I can't control this. This is not market replay. It's just the end of the day. So it's bad time to trade, but this is where we would expect the delta to kick in. And if you can start to see that delta percentage still lower than 9%. It's not powerful. Delta's not powerful yet. Delta becomes powerful when the delta works in our favor. Therefore, delta percentage is a gauge of power. That's why I've coded it this way, is because delta is delta, but delta relative to the percentage of volume means nothing. When you've got high deltas compared to the volume transactions, that's really important. This is why order flow is, you need to think, you need to see it. Now take a look at that cumulative delta. Went from 12 to 4 to 1. You can start to see it's a mixed state in here, right? Now they might run a stop run. They might come up, hit the stops to induce that liquidity, because a lot of traders have already placed their stops above that. We're not sitting there trying to get in yet. We have no reason to. We can arm short, but there's nothing here saying that we're going to get short. There's no imbalances happening. There's no nothing. And that is why I would wait to see some form of confluence to the short side. Arm those shorts, baby, because that's when you're going to be engaged in the right time. That's how you properly engage order flow algo. Make sense? Now you're not just using an EMA, or you can use area of interest, but you can also look at absorption. And absorption's powerful, man. Because it gets you in when the market's telling you that the data's on your side. There it is. There's the delta. We need that delta percentage to kick up above 5%. Hasn't happened yet. But now we're starting to see that rotation. We're starting to see the order flow helping. We don't have any major sell imbalances yet. Take a look. Price and delta are still non-correlated. You can see the state is white. This is bar by bar, play by play, trying to help you under. There it is. Now you're starting to see some correlation. If price starts to trade down, take a look at that delta percentage right now. Delta percentage of that bar is pretty heavy, but there's not a lot of bar volume yet. The bar just started. So this is a great example of waiting for price action to unfold a little bit. And this is the close, guys. I don't expect any magic to happen here. You might get a surge, but I don't expect they could easily just keep it right here till going into the close. A lot of times the market doesn't move off the close. But if this was the open, or if this was midday, I would expect some follow through here. See how the delta percentage here? See, it's mixed. Yeah, they, like I said, they might drive up and fail again. I'm okay with that because there's no reason for us to engage shorts yet. We don't have any major confluence. Makes sense. Hopefully this helps you see the power of what type of product this can be. It's not just automating entries. Makes sense, guys. So I think that's it. I think it's time for me to grab some food, or I'm going to probably fall over in my chair. a lot of talking every day. It just takes a lot out of you. And I've primed the pump. I've gotten you guys, ready for what's coming. Okay. And, this is important. This is important. It's going to help a lot of people, I think, make a lot better decisions. And the reason why we're only doing it on one market at a time is because most people can't think more than one market at a time with this much activity. Order flow is a lot of activity, guys. So I'm just writing down what I want to test, and I'll take a look at crude oil. I'll run a crude oil test as well, guys, and we'll do this. If you guys need any help, we'll post the link one more time, and I'll do testing on other markets after the primaries are done. Yeah. Take a look here. Where's that link in here? I think everybody's got it. We'll get Jim to post that link. Jeff, I mean, Jim's gone. He had to leave. That's fine. The link's in the chat box above. Let's find it here. For anybody here that needs it, here it is. I had it copied in the text. It didn't copy. Order flow creates the volume. That was on my clipboard. Take a look at the rotation. I can't get it to copy in my clipboard, guys. So Jim, there it is. Thanks, Brian. Appreciate it. Couldn't get it. Take a look at the rotation. Take a look at what's happening here. You see how this is unfolding? Head and shoulders pattern forming on the 1 minute. And we're going into the close in 30 minutes, but we could get a push here. Makes sense. We're coming out of the value area high. You just want to see the data work in your favor. You don't have a lot of data working in your favor yet. There hasn't been a lot. Like, you could have engaged the selling from here, take the 0.5 target, but until we really start to see like big delta stepping in here to the short side, there's no need to get real aggressive on executing on the short side. Make sense? Big delta means everything lining up for confluence, like delta percentage above 9%, state is negative. Like right now, like it's still a mixed market. Mixed markets happen in consolidation. Consolidation is building positions. Building positions happen when orders are offloading or putting on a position. Resistance. Guess what's happening? All the buyers from the point of control built their position here. All the liquidity for buyers came in, drove it up to the value high. Now they got to offload. That's where all their profit taking is. So all the offloading happens. Boom, 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 boom. And if they're planning on taking it higher, they're going to be adding to those positions, not selling. And that'll be reflective in the delta. When the delta kicks in, buyers will happen and they'll lift. Therefore, we're saying, okay, they're going to take it higher and we wait. But we don't need to be on the wrong side of the market for that. And this is a great indication of letting the data tell you what it's doing. And it's my job to make sure that you can make sense of it. Delta percentage is a percentage of the deltas and the bar volumes. Zarko, yeah. 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 So guys, I think that's it. So all green is not anything. So let me explain this. We're resistance. So when you have all green happening here, if this comes in and it gives you all green again, what I'm not looking to do is go long. You say, well, why not? Because I don't want to go long into resistance on mixed information. So what I want to do is I want to see that that all green pushes up, but fails. And then once I see that, that gives me the indication that it's time to turn on the shorts, because it's just proving the same information that proved down here. It's the same type of information that caused this to happen at the point of control. This is the point of control right here. Okay, that's the point of control. So when the market came down to support, boom, 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 look what happens. Down, boom, you get that break of structure, higher low retest, and lift up, right? But here's what's more important. What I want to be doing is knowing that this is the point of control. There's a sell order here, confluence, but it worked. Confluence, but it didn't work. As soon as that confluence that didn't work happened, you can engage longs on the close of that bar and lift up. And if you want to wait for this to happen after that rotation to turn on, you can. That's what we're doing here. What we're doing right now is, look at this candle here would have been the exact same environment if you would have armed long on the rotation bar. You would have been able to get the first short. The first long came here, right? You would have been able to do that. Okay. But here's the key. Sometimes that is timing the top and timing the bottom. So what you do is you realize, okay, this is the rotation. And then you wait for the first indication of the buyers giving you the confluence at the end of the rotation. That is where you arm longs and you go long. Why? Because it's the indication that the market is giving you the key. It's the key. It's the key to the compass. It's telling you that this is where the market's rotating. So right now, take a look. This is where the confluence failed. That's the first resistance bar. You could have armed short, got the 0.5. But then here, what we're doing is we're waiting for the first sign of all red. As soon as we see the first sign of all red, that's when you can start to realize the buyers are exhausted. They're done. There's no more buy order flow in the print, which tells me that at resistance, all this delta has been used up, which tells me all the longs that were here have basically taken all their profits, all the liquidation has happened, and therefore there's no more buyers. And that's when the sellers offload and they bring it back down. And then they offload the buyers, and it just happens all over the place. I'm just trying to give you the clues as to what I'm looking at in the data to help us make better decisions. Does that make sense? Because you can take the point of control and we can arm bar close signal here in V2 or arm imbalances. And that's just all I'm doing. I'm just waiting for key levels of interest to let the order flow data tell me how to trade order flow properly. So powerful. It's so powerful. And we just automate the entries because there's no way you're going to do it fast enough, right? It's too hard. This is how you take discretionary trading and automate the entries versus just let the algo run off the open in the first hour of the day. You can let the algo run off the first hour and a half a day because it's designed to trade that maximum movement and you're going to get that flow. But let's say you don't want to trade fully automated systems and you really want to get your pulse on what's going on in the market. You take this as a major timing tool and you optimize the execution. It's good trading. You'll have really good results with this. Yeah. Yeah. Yeah, I don't know what that means, Shai. That was a mistake in the clipboard. Yeah. All right, guys, I'm done. I've done my part in here, and hopefully you guys value this. And post some comments. Like I get a lot of hate. Let me just explain this. I get a lot of hate from a lot of people that want to punch me in the face because they can't succeed in the markets. I wear that punching bag very strongly because when you build products and services, you can't make everybody profitable in the world, right? Because everybody's emotionally damaged. No offense, it's not our software. It's traders using our software that create loss. Because the traders that know how to trade well make a lot of money regardless of what other product they're using. They're good traders. So if you go into the Discord, Sean's this and Sean's that and blah, blah. But when you come to these events and you take this type of information, if I've helped you in some way, then write something positive in the Discord for Christ's sakes. Like be a positive influence to the community, right? Right? Because eventually what ends up happening is the good traders like myself and the Bobbies and the Gilberts and the Roys, we don't want to help people because everybody's so damn negative. Does that make sense? Like, why would anybody want to help people that all they're doing is bitching and complaining? Right? Just because you spend money on a product doesn't mean you're entitled to profitability in the market. You need to earn that. Traders earn their stripes. Indicators fill the toolbox. Algos fill the toolbox. You still need to become a great trader. And it's your job to ask questions, come to AMAs, learn, be positive, ask for help. Don't be pointing the finger because you don't deserve the profits that you're asking for. Every one of us that are really good at this spent a decade to get to be where we are. And I'm just laying it to you straight, because at the end of the day, it's not about the money. It's about being able to add value. And you've seen my post in the Discord earlier this week. I said, I don't want everybody posting just profits. It's no use to everybody. It's not that we don't value the good traders in the community. I value everybody that's a good trader because they've earned it. But it's not good to just post results when nobody can see how you're doing it and nobody learns from it, right? That's why I do these AMAs. And that's why I want to come into the trading room and help people. Because at the end of the day, if we're not leading by example and helping people at the same time, then what's the point? Right? How many of you guys would agree? Because everybody wants to make money, but if nobody's willing to help everybody, then nobody gives a shit really how good you are. Right? Make sense? How many of you guys agree with that mindset, that logic? Right? I didn't build NeuroStreet, ARC, CryptoStreet, and all of these companies and spend millions and millions of dollars helping thousands of people around the world just so a few people can come in and just boast. I don't care if you boast. If you're making a lot of money, great. But add value. Right? Post your trades. Show your fills. Right? Show why you got into the trades. Be a part of the community. Right? When I played sports, I played competitive football for 4 years. I played hockey with some of the guys in the NHL. Like, I have friends that won the Stanley Cup. Mike Richards. If you know him, Google him. He's from Kenora. I'm from Kenora. My dad used to teach AAA, right? So, like, I'm very competitive when it comes to sports. And you know what we used to do on the sports teams when you had one guy that tried to steal the puck, never wanted to pass, didn't want to be a guy that wants to set up the plays? We benched him. Even if he was the best player on the team, we benched him. Why? Because the best results come from people helping each other. And it's called being a team player. Make sense? Now take a look here. Stop runs. They're going to get a bunch of buyers stepping in here. I will never buy here right now. This is not for me to buy. Now, you might miss a move up once in a while. You might miss a move up, but you're at expensive territories. So what I'd rather do is I would rather wait till I see this fail. Right now, this is a great example. Buy delta kicked in. This worked. So what I want to see is I want to see the buy delta fail. I want to see this rotation happen. That's the stop run, inducing the liquidity. The buy delta fails to push the market higher. What I'm waiting for is I'm waiting for the rotation to absorb that buy delta, get the big push to the downside, arm the shorts. Arm the shorts. That's the whole point, because it's going to empower you to get in at the right time. You see that? No, because if I'm on the other side of resistance and I break above it, I will attempt to trade long in support. Yeah, great question. So CL is asking. So take a look at this. If this delta kicks in here, you start to see that absorption. You could arm the shorts. You could arm the shorts in here, right? To try to, I'm not going to arm anything because it's the close of the market. But this would be an example of, you can see the sellers stepping in, right? But this doesn't mean the sellers are now going to drive the market down yet. Why? Because that this does not indicate intent yet. What you need to understand is that this is offloading of the buyers that drove the market up. That's profit taking. Profit taking will show the absorption of the market. And therefore, when the market drops back down, what you want to see is the confirmation of the big delta step in here, because that's going to give you the trend setter. That's when you can see that there's no more buyers that can hold the market. That's why divergence traders get stopped out all the time. And that's why reversal traders get stopped out all the time, is because what most people don't realize, that market makers and people that are creating the market, they need to sweep the stops to induce the opposing side of the order flow. It's a liquidity game. It's a buy-sell liquidity game. And if they don't sweep the stops, they don't induce the opposing side of the order flow, which indicates the next part of the move. Stop runs are important for guys that know what they're doing. This is going to change the way you look at the market. I'm telling you guys, this is going to help you guys. That's why we spent so much time building this. My job is to help everybody here, right, become the best trader possible. Makes sense? And it's really critical that you know where you are in these areas. Really critical, because this is critical resistance right here. There's key resistance here at the highs. They might drive it up right here. They might drive it up. Look at the confluence between all these highs on the 30-minute candle. That's confluence. That's highs right there. There's a lot of resistance in here. Right there. It starts right there. That's the confluence. They might drive it even further. Why? Because banks want to drive the market up to get resistance, but we never need to be on the wrong side of that with what I'm teaching you. With what I'm teaching you and what I'm going to show you is you never need to be on the wrong side of this information. You just need to have somebody walk you through it for a few freaking days to teach it to you so that you understand it. And I'm willing to do that. You just need to get the tools, or else it's not going to be worth your time, right? It's not going to matter to you, right? So if I know I got resistance here, guess what? They may want to drive it up even further if they decide to keep buying in here when we're expensive. Then we need to let the market do its thing. However, when they start stepping in and showing us that that's done, it's a pretty powerful place to be. Does that make sense? So what you want to watch for is the rainbow. Look, it's good when you can see it like this. It's like the Rubik's Cube. Point of control support. Comes down. Boom, 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 boom. Delta failed. Right there. Rotation. Impact steps in. Sets the tone for the roll to the highs. Delta rides the leg up. That's the wave up. We're in resistance. They're going to challenge profit taking in here. Delta still positive. We haven't had indication of major selling step in yet. They may be adding to their positions in here because they have the intent to drive it more expensive, suck in all those people that put their stops up here. A lot of people put their stops above that high. I can tell you that right now, because that's what all the retail traders do. All the retail traders don't understand what I'm teaching you. Telling you straight. They don't understand it. So they just look at structure and they look at, well, there's resistance. I put my high here and I'm at the very high. That's a good place for my stop. But what the data tells you is that the market is going to do what the market does until it doesn't. So they've just come to another major area of resistance. They weren't finished. Interesting. We don't need to worry about taking trades yet, because what this is telling us is that the buyers are still controlling the market, even in expensive territories. So when the market's expensive and the buyers are still controlling the market here, okay, guess what? You let them do their thing. Because when they fail, look, they didn't fail here. They didn't fail here, but they're failing right there. And there's the absorption. So what you could do is you could arm short for the first objective. You could quickly get a short entry here. Take a look. Going to drop it. There it goes. You could arm the short. You would have been filled already at 41 right here. If you were using the imbalance software, you would have already been filled on the open of that candle. You would have been filled there short. And what you can do is you can go for the first regression trade. This would be mean reversion. The absorption trade is mean reversion. So what that means is you get the ability to catch the first imbalance. The first imbalance was here. Okay, the first imbalance is here. Now, remember, sellers are not in control of the market yet. You're just absorbing the first reversal. And normally in these situations, you'd want to go with a tight target. You don't want to go for the full weight until the big delta steps in. And the delta stepping in here is where you're going to really start to see the move. And if the delta steps in here back to back like this, this is counter trend. Remember, this is counter trend. So therefore, you would go with a tight target, 0.5s. And remember, you would have already been filled. If you had the software on, it would have filled you here short right there. You would have been filled short right there with a 12 tick stop the way I have it set up. You would have filled it. You would have filled it. Let's wait for it and see if it gives us the 0.5. Now, this is a great example of the absorption counter trend trade right here. You catch the 0.5. I don't expect this to give me the massive follow through yet. I expect to give us some movement. I expect to try to get at least a 0.5 out of it. That's our objective. Okay. Because that's what you're expecting after the absorption. Okay. However, sellers have not proven that they're going to take this market down yet. Of course, this is prop compatible. This is not a fully automated black box. This is automated entries, fully automation, semi-automation. But let me just explain a few things here. When this rotation happens, okay, and we start to see, we'll wait for it here. We're going to wait for the market to do its thing. Maybe it'll give us an opportunity at the close. I don't expect a lot of follow through. We're going to the close is dangerous. But the key here is that when the sellers come in here, we can get a little bit of follow through. Remember, we're on an EMA. We're into support, right? So you have to understand that you're going to be fighting the market a little bit here. It's going to be harder for the big flush to come in. You're not selling right now is counter trend. So knowing that, you always go with a 0.5. There's your 0.5 target. If it, there it is, 0.5 ticks through. You can see that that was the trade. Waiting for the engagement of the short. There was an imbalance in the candle in real time. You see how it's not there anytime? I have it turned off. You can't see the freeze yet. And this is the power of the HFT order flow algo, because you would have seen that order flow delta kick in. And this is where, you can ultimately go in and take that execution 0.5 target for the counter trend trade. But when would we want to go in for the big one-to-one move? I would want to wait for the market to do this and then break below structure. And when I see that break below structure and I see a mixed market change to a strong delta, that's when you know the conviction is going to come. That's the trend setter. This is not a trend setter delta. This is not trend setter delta. This is absorption delta, which can become the trend setter. We have no knowledge of that. We have no knowledge if this is going to just whip down like this. It very well could. How often do you call the top? Get lucky once in a while, you might. But if you really want to be mindful of what's happening, what we're waiting for is this. We're waiting for the big move to happen, the trend setter. We're now in this. We would have just traded this for the 0.5. The delta needs to do its thing. The market's got to do its thing before it kicks in. That's the trend setter. So now what you'd want, you want to see the trend setter. There's the one-to-one. I was telling you, you would have engaged that short there if we had it. And then what we do is we wait for the market to do its thing. Look at deltas are mixed. Yeah, I would try to do for point. You can do 1-to-1 on every trade, but I would arguably think that the counter trend should be 0.5. Why would you want to go and risk? You're on the wrong side of the market still. Shorting right here is you're on the wrong side of the market. Not wrong side in terms of your ability to take a profit. You're fighting trend, your counter trend. So what I'm waiting to see here is the market to come down. Okay. Push up, break structure, and give me a trend setter in the big negative delta. And then I'd ride that for a 1-to-1 boom down for the trend. And then I would engage the imbalances to trade short down. And I would make sure that I know where my high volume nodes are so that I know where to expect support to be, because I don't want to be trading into stupid shit. Like, it's just, you're going to blow your account trading into stupid shit. Right. How many of you guys felt that this helps you understand order flow better than you've ever learned it before? I just want to know if you're gaining from this, if this is something that will help you understand, because I'm going to run the classroom like this so that everybody understands what to do. I just need to know that you're getting something out of it. So that they can, like, think about this. Trend line breaks. Trend line breaks. Guess what? You're trading the trend line breaks here. Wouldn't it be nice to see that happen on the trend line break? Right? You get the confirmation. You know, like this is the, like when you look at the ATR trend line breaks or even the detour trades and all that stuff, like this just puts the power back in your favor. Right? So for anybody in here that wants to say that I don't know what the hell I'm talking about when it comes to trading inside a Discord because they don't see me running a trading room anymore, it humbles me. Anyways, guys, I got here by helping you guys. By helping you guys, I become a better trader. So by becoming a better trader, we indirectly help each other, and it's a team effort. So can we all agree that moving forward with this, we're all going to the major league starting next week. I want everybody's commitment. I want everybody's commitment that everybody's going to show up, sign up, and pony up and be willing to do whatever it takes. You can take your other algos, the reversal algos, the wicker algos, the break ATR algos, the VD algos, engage them when you're on the right side of the market. So can this be used as a true outlier? Yes. You can put this on one chart and turn on and off all the other software at the right and wrong times, because you'll know now how to understand the data. I strongly suggest by definition that you have a higher time frame areas of interest chart. Then you have your order flow chart, which is your HFT algo. You can run whatever charts you want on everything else. Maybe you have a few different tools, supply and demand, AT Trader, blah, 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 blah. But you use this chart in combination with this chart to tell everything else to do whatever you want. And I think it's just a much more powerful concept. Guess what's happening? We're putting in the lower high retest. If it wasn't for the close, I'd get excited. But this is now the close here in 1 minute, and then the market's going to shut down. And then what would happen is if this was market open, I'd be waiting for the break of structure. As soon as that candle closed down, I want to see it go from mixed markets to confluence. And then I want to ride the hell out of that down to the point of control, because that's what they're taking it. And moving forward into Monday's class next week, this is exactly what you're going to see. You're not going to see anything different. You're going to see the auction on the weekly auction. I like the weekly. It's easier to read it. It's easier to read the information on the weekly profiles. Like, it's just, you have less noise. I don't want to be confused. I want clarity. There's the trend. No trendsetter. Look, and see, this is me jumping the freaking gun because I'm paying attention to Delta, but it doesn't give me 10. This is the trendsetter. If this were to close down, we would automate that short, not going into the open. Like, this is the close. The market's closing right now. But this is the break of structure here, right? And this is the trendsetter, right? Now, remember, there's support here, but just remember, you could ride down to that. They might want to come back down to there. So if this closes, there's the trendsetter. If this goes to all red, it has to be +9 delta. The delta impact has to be high. If the delta impact isn't high, I won't trade it. Watch. See, look at the delta. The impact of the delta is weak still. It's not enough for me. It's not enough. I'm not going to trade something that's not badass. Like, I'm putting money behind this. Like, think about this. You're putting your prop firm. You pay for those prop firm evals. That's money out of your pocket. Think. Like, I need to make sure this is really good in order for me to engage. We've already taken 2.5 targets on the counter trend setups, just watching the absorption. I want to see that -3 become 9, 10, 23. This is the end of the market. But This is a great example of when we would want to come up here. And I would just have if we had the settings, what we're going to do inside of the strategy, what we're going to do inside of the strategy is you're going to see a setting up here. It's going to be called confluence signals. Right? There'll be a confluence signal up here. And what'll end up happening is you will have the ability to turn combined signals on, right? So what'll end up happening is you'll be able to combine, you can have one or the other. You can trade imbalances, or you can trade bar close entries on confluence trades. And Jeff and I will set that up. So when we go here and we show long and short, well, long and short what? Long and short imbalances, long and short confluence trades. If you have them both turned on, then you could have them both on the same algo. You could have one chart for imbalances, one chart for confluence trades, run them on different accounts if you choose to. And this is something that I think could be very powerful because it's following the same logic. I think that's it, guys. I think, there's no point. The markets are closed. Like, I don't expect the market to do anything crazy here. We're not going to expect some big move down to the point of control, but like, think about where we're at, right? And think about why this information made sense. Like, I walked you through two back-to-back wins on this market, just talking about what we're doing. Like, let me give you an example and we'll end with this. 2 computer licenses, friend. Yeah, 2 computer licenses. So let me just show you what I'm going to do here, okay? So if I show you this, and this is our macro profile software, I think it's the best software. If you want auction software, it's the best that there is. Like, anybody out there that you see driving software with drop-down menus, they're just copying us. They're just copying us. We pioneered it. So let's just talk about this and let's just merge. Let's just go into the dailies, right? Recalculate it. So let me just explain this for a second. To me, it's complicated as shit. Like, and I'm a good trader. So if I'm saying it's complicated, it's because it's complicated, right? This profile software allows me to look at daily auctions, weekly auctions, monthly auctions. Right now, I've got 2 distributions. So if I split this profile, auto split. Oh, and there goes Ninja. There's the auto split. So now if I'm looking at the auto split function, okay, I've got all this information. Well, where's the point of control? Where's the value real low? To me, it's just so much noise. Like, I've got a value real low here. I've got a value low here. I got resistance here. I mean, which point of control is the point of control? Like, yes, you could use the most recent auction as your driving factor, which is fine. But I like to keep it super, super simple. So for me, I will normally do the weekly auction, because now what I can see is a very clear picture of what the market's been doing. The market's been going from expensive to cheap. There's a point of control in the middle, which acts as resistance and support on both sides of it. And all the bulk of volume is right here, which makes sense. So what am I going to do? I'm going to map out value highs, value lows. I'm going to map out the point of control. We don't have any low volume nodes inside this auction. Low volume is down here. So you could arguably say that low volume is on the cliff here and the cliff here. Every bit of low volume is down here. These are all levels of low volume nodes, the cliff of volume. Whenever the volume drops off, cliff, 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 low volume, low volume, low volume. These are rejection points. Good places for targets if I'm trading short. Good places to go long on a counter trend imbalance trade. But what I'm going to do is I'm going to map out my auction like this. Now I'm going to basically point out that that's a point of control, right? This is low volume coming into high volume. So I'm going to map out that as a key level. This is a key area of interest. If they're coming back down, this is support. And we can trade that long back to resistance. If we come in, we can trade it to support until it fails. Once it fails, guess what? So we watch the order flow. We trade it from resistance. Boom. Trade it back down. Trade this as support, right? Based off of the data that we see in the absorptions, we can do that. And what's nice about directional trading versus non-directional trading, and what we're going to do in the trade room next week, is that right now, this is non-directional trading. This was counter trend trading. But this now becomes directional trading. And so you have the ability to say, you know what, Sean, I just want to trade with the market. Perfect. So then you wait for that whole rotation to tell you that we're trading on the right side of the market, and understand that they need to go from very high down to the point of control. So if you want to be with the market, you're not going to trade here, but you're probably going to trade this part of the market right here, which is fine. And if you want to engage in longs down here, remember that'll be an absorption play like this, but that'll be down here. Counter trend 0.5 targets. Why? Because you're fighting the freaking market. You're not a freight train. Can't stop the market. Can't stop the market. So why would you want to try? You don't have that much power. You're not God. So be in and out. Make your profit. Make it quick. Take a 0.5. Be grateful for the 0.5. And when you're on the right side of the market, expect that's where the bigger moves happen. And if they don't go on the right side of the market because they're not ready, they're going to flush down here, and you trade directionally down here. Does that make sense? You're going to be able to see these rotations. We're going to walk you through these rotations because they happen every single day. Every single day. They have to. That's how order flow works. All right, this time I'm actually done. I just been such a long time since I've been teaching full time like this. I just love it. I just love trading. I love teaching. Hopefully you guys took a lot out of it. All right, guys. So guys, I'm going to shut down. Thank you for being here, and I'll see you next week. If you want this software here and you don't have it, send an email in. You're going to need a discount on that. If you end up buying it, we'll give you a discount on that. That's the macro profiles software that is on our website. But the HFT algo is the bad boy, the badass. Yeah. Well, you only need both if you don't have auction theory. If you can use the basic auction theory that's inside of Ninja, like NinjaTrader has a market profile tool, but you need to pay for their lifetime license for that. And if you don't have a lifetime license, it's going to be difficult to do that. We have a cumulative, or excuse me, a CWAP trend trade, like it's what do you call it? Anchored volume. Anchored volume allows for us to be able to draw manually profiles everywhere, so you could use that. And
CWAP, cluster VWAP, cluster VWAP.
Yeah, but it's anchor. The product's called anchored VWAP. Yeah.
Anchored volume.
Anchored volume. Yeah. Yeah. Can you share this workspace without your Replicanto? Yeah, it just won't load Replicanto. It'll just load this workspace. Yeah. I'm going to get workspaces and templates ready for the trade room for next week. Jim and I are going to work today and tomorrow on that. Yeah, you don't need Replicanto. Replicanto is a trade copy software, so that if I take a trade in one account, it takes a trade in 5 accounts. All right, guys, have a fantastic day. Hopefully you guys see value in this and got a lot out of the AMA. We'll post the recording. You guys are in good hands. Enjoy the rest of your day. Walk away from the computers, guys. Get some breaks. Go do some gym time. Go take your girlfriend and wife out for dinner, or husband. You want to send Jeff some cookies? He's earned it.
I like chocolate chip.
All right, guys. Talk soon. Cheers.